And we are live. Guys, welcome to the first live stream of the new channel, the Brandon B Show. Oh, by the way, I perhaps should have done this before. I don't know if you can hear this in my audio. Do you hear like a jet engine noise in the background?
No.
No? Okay, that's good because my laptop sounds like a jet engine right now. I'm going to try and fix that in the background. But guys, how you doing?
Doing well, sir. It's pretty exciting that we're the first on your new channel. That's pretty cool.
Yes, you guys are the first to stream on my new channel. So highly appreciate you guys' time and your willingness to come on and share what's going on. And yeah, guys, this is history in the making here.
There we go.
Buck, how you doing?
I'm well, although I just vomited a little bit in my mouth when I saw Dylan drinking that Red Bull because it made me think of something.
Yeah, isn't that unfortunate? By the way, for the longest time, I never understood what Richard was referring to because I don't know about y'all, but like around where I'm at, it's common to see the small Red Bull cans, and so like I never got what's this guy like boasting about. But now with your Red Bull, it makes a little bit more sense.
Yeah,
like okay. I mean,
yeah,
sure.
you could have at least gotten a small Red Bull can. So
I mean, if you're gonna go, you got to go all the way, right? So
yeah, help with the visualization for sure.
I don't know. Last night was a long night, guys. I don't know if anybody else was watching the market, but pretty fun to watch USDC.
Deep peg.
Have a little bit of panic going on.
So. Yeah, absolutely. So, guys, look, I brought you on to talk about PHUX here, but before we kind of delve into all that, the market is crashing and burning. I'm in a sheer and utter panic. I've been I've just been dry heaving kind of all night, and so I want to get your guys' take on the recent USDC depegging situation, the Silicon Valley Bank going belly up. How are you guys viewing the situation? Are you two in a complete and utter uncontrollable panic as I am, or are you perhaps less so worried? I don't know. Dylan, maybe do you want to start and we can go to Buck?
Sure. Yeah, I'm not really that worried about this stuff happening. Considering that I think there was a number of like $3 billion of deposits from Circle or something like that was affected in the Silicon Valley Bank, which, they make that an interest for their treasury deposits and stuff like that, right? They can make that back pretty easily. And, they're not going to let that golden goose go. So, I think that'll be fine. However, I'm probably not the one to comment on the legacy side of things. Probably Buck will have a little bit more insight. But as far as, what's going on chain with the liquidity pools and stuff like that, a lot of that liquidity is drying up from like the curve pools and things versus USDC. A lot of that shit's drying up. And, we were watching the SAC address move around some money. And then another address that was related to it also moving around, 9 figures worth of USDC. And I mean, there ain't enough DAI out there for him to completely absolve himself of the USDC position. So it's going to be interesting to watch what he does. So.
Yeah, absolutely. During the beginning stages, I tried, I did swap USDC for LUST, and there was quite a premium there for a second. And yeah, we have seen, I think USDC managed to depeg. I believe it was below 90 cents for a little minute. I think it might be back up. I can double check here in a second, but yeah, it's currently depegged. I mean, Buck, how are you viewing the situation?
Yeah, I think it's an opportunity. I guess I have exposure to all the stable coins, pretty much. So probably I'll say that just out of forthrightness. But yesterday I was actually buying USDC and selling USDT, and I was buying DAI. So I think that's a pretty good opportunity. Basically, I probably made more money doing that yesterday than I made the first year working in finance. When I was a kid. So yeah, it's a really good opportunity when something like that happens, because the USDC thing, assuming we're not being lied to, if we just take everything at face value, right? Because I mean, if there is, let's say, a massive fraud like FTX, then I can pretty easily be wrong about this, but I'm going to assume that Circle is a pretty well-run company. It's in bed with BlackRock, and and was trying to do an IPO last year. You don't do an IPO if you're a massive fraud. Yeah. Basically that 3 billion hole, sucks, but like it's not going to have a zero recovery value. It's just something that they're going to have to go through the legal process of dealing with this bankruptcy of Silicon Valley Bank. I would imagine if they're depositors that they're going to get back 100 cents on the dollar. The way bankruptcies work, the way banks work, is they have a capital stack of basically different priorities, with the equity guys being at the very bottom, and typically speaking, the depositors being at the very top, right? And then in between that, you have a whole bunch of debt holders and capital providers along the way. You have to basically pay the employees and the depositors first, right? What they're owed before any of the other debt guys get their hands on anything, and then the equity guys are the final priority in this. What that means is typically the equity guys get wiped out, and the debt holders end up taking over the business, what's left of it. Right. And most likely you'll see depositors made completely whole. So I don't see why this is causing a panic. Why this should be causing a panic, assuming it's just another orderly thing. Now, it could be that there's more we don't know about, but I don't think this matters at all. So I think you can basically buy USDC and DAI at a big discount right now. And that whole shouldn't matter. And you'll see it repeg probably today or tomorrow.
Really?
Yeah, probably. I think on Monday. Yeah, that would be my guess. Just because it's like, it's Circle doesn't need to make every single redemption, every single day, right? Like that's actually like a ridiculous standard to even hold yourself to. Your ETFs couldn't, sell every single security in their portfolio, if everybody tried to redeem today, right? Your funds couldn't do that. It would take them weeks, to do that, and that's not going to happen here either. It's still like a very reputable firm. The fact that one of the places where they had their money deposited went bankrupt doesn't mean that they necessarily are poorly managed, and in fact, it's a relatively small exposure. So I think that's I'm really surprised the market's overreacting this way. I'm not surprised, but I just think it tells you that these guys can't do math. They don't know anything about finance.
Well, isn't that funny? Because like it goes back to the thing that people rarely make decisions based off kind of a logical thought out thesis. It's all emotions. It's fear and greed. People make decisions
in the short term. That's right.
Yeah, right.
In the long term, rationality usually prevails in these situations. But yeah, in the short term, when people are confused, you get guys panicking, and so converting hundreds of millions of dollars to other stable coins. They're willing to accept pretty big haircuts for doing that. So I call those people dum-dums, and I go the other way when that happens.
Yeah.
So
yeah. Well, yeah. Being a kind of a contrarian typically kind of helps outperform the market, I find. Now, I don't know if you guys are familiar with the All In podcast. Have you guys heard of it?
I think I've heard of it a couple times, but I've never.
Buck, you heard of it?
Is it a poker podcast?
So they do play poker, but no, it's not. It's actually the largest. I believe it's the largest, or one of the largest kind of traditional finance podcasts there are out there, and it's a kind of like a 4-man podcast typically. A lot of them are kind of in the VC world, the GP LP world. Buck, are you kind of familiar with that side of things? Am I correct?
I mean, I'm in a different part of finance than that, but yeah, I'm familiar with it. Yep.
Okay, well, the reason why I bring this up is I was listening to the podcast earlier, very, again, large finance, and they were very panicked, specifically because they have exposure. This is exactly what they do. They're VCs, they have exposure to funds and stuff. It's what they do, and they're very panicked. They were saying, this might have large implications in terms of, at the very least, the spreading of panic. There might be a run on the banks. You guys, are you guys feeling that at all? You guys aren't buying that? You guys think this is a very kind of isolated incident? Because that's essentially the big question right now. Is this an isolated incident, or is this the first domino to fall that's going to cause the new 2000 financial crisis and therefore affect crypto?
Yeah, this is not a systemic bank, and I don't think this is systemic risk the way we had in 2008. So I'm not too worried about it. I think it could be symptomatic of a lot of bad debts that you're going to see in the tech space. Especially if the economy rolls over. Like it does sort of remind me of that, right? But I don't think this is gonna knock Wall Street over in the way that the U.S. housing market did in 2008, right? Because I think that's what people are alluding to. They're going, oh well, if this thing breaks, and then a bunch of other things.
How widespread is this kind of thing?
Yeah. I would say the excesses in this last cycle, apart from in crypto, were in tech. You had the SPAC thing, and you had these unicorns that were probably really massively overvalued. And yeah, a lot of those things are going to go bust, and a lot of people in Silicon Valley, they're going to lose their jobs. And that does have knock-on impacts, right? But on the other hand, I still don't think, like we're necessarily, way over our skis and gonna, collapse the economy over these things.
I hear you.
It's just not the same environment.
It's not like the average Joe is taking on 3 mortgages, and having variable interest loans or anything like that, right? This is VC speculators buying, investing in,
there was an orgy of speculation going on in 2006, 2007, and you just can't get that same level of speculation in traditional finance anymore. It's actually not possible to get that kind of leverage. We made a lot of changes to how we operate, right, as an industry, and how we settle and how we clear and all these things, and a lot of that stuff works very well. You're always fighting the last war with these things. It won't surprise me if you see a whole bunch of dead bodies in Silicon Valley and related things to that. I think those kind of knock-on effects are possible. I was thinking yesterday about this USDC thing. It could blow up a lot of fund managers in the crypto space. I was thinking about that actually, potentially, because most of these guys use USDC as their kind of base currency, right? You can see some dead crypto funds, a la Three Arrows Capital style failures. So I'm curious about that as well. But so far, I haven't seen or heard anything.
Buck, if you don't have an opinion on this, this is fine. But it kind of does strike me, and I'm curious, even Dylan, how what your view is on this. It does strike me that specifically, funds operating in the crypto space, it seems, at least to me, like they're bringing in their investment thesis from the traditional finance world, and they seem very interested in building out kind of certain CeFi things and certain infrastructure things. And it does strike me that they're, I don't know if unwilling, or they're missing some opportunity in regards to investing in tokens. Now, I know there is a lot of that out there, funds in crypto specifically investing in tokens, but it does strike me like there is a large focus on kind of building CeFi infrastructure, and there is a tons of value in that, kind of controlling onboarding, offboarding mechanisms, and the flow of people, of where people are and how people interact in crypto. I understand the value in building out useful infrastructure that people use. Totally get that. But what I'm trying to bring up here is that it does seem like why aren't VCs, crypto funds, all over Pulse Chain? Perhaps some are, we just don't know about it. But that does kind of strike me as something a bit peculiar. Do you guys see that same critique, or am I kind of just speaking to myself here?
I think maybe it's probably just because of the way Richard Hart ran things, to kind of, keep those people away, maybe. And then, it was kind of more structured for like the average Joe, I guess, right? Maybe they come in later on, right?
Sure.
And then also, I think that a lot of the CeFi stuff that they're doing, it's perhaps less risky, and then more of a what is it? There's a terminology for it, but I'll just say like a regulation arbitrage, where if you're the one with the golden ticket, and you have most of the traffic, then you got a golden goose there, right? Like Coinbase, if they do it by the book, and they can pretty much have the monopoly of the US on and off in crypto, right? If they just do it right.
Yeah.
And so there's a lot of value in that, and it's not really that risky. They don't have to deal with making a token and not having it being a security, or shit like that, right? They can just be a provider. They can allow you to get in and out, do your stuff, and they could just profit off of the they can be the house, right? So I think that's probably why they're so attracted to that, because if you get it right, you really don't have to do much, right? Whereas if you're running a token or doing something like that, then you're arguably you're gonna have to dump on your customers or something like that. In those cases, like those VC guys, when they do invest into those sort of cryptos and stuff, right? They kind of wait and okay, where's the peak at? All right, well, this is the peak, and all right, well, we got to unload our position here, and you're the exit liquidity, so you know what I mean?
Yeah, I get what you're saying. Now that makes sense. Buck, did any of the noises I make any kind of sense to you?
I actually just read something about Circle just now, so I kind of missed your question. Basically, Circle just said they're going to resume operations as normal on Monday. So I guess I was right about that. And they said basically if there's any shortfall, they'll cover it from any means necessary, including external capital, which means they can just go borrow money from somebody, nice. or bring them on as an equity partner. So basically, yeah, assuming there isn't some massive fraud here, and you take this at face value, I think you're gonna see USDC repeg very quickly.
Now, since you guys are part of a team, let's start to transition more into PHUX and what you guys are building out here. Has this changed at all the way you guys think about the current stablecoin landscape? I mean, is this just kind of like the first sign of a much more fundamental risk with some of these stablecoins, or was this kind of really just a small bump in the road, nothing to really worry about long term? How are you guys thinking about the stablecoin space? Has this fundamentally changed anything for you, or no?
Well, I mean, we've been kind of expecting this to happen to the Tether since 2017.
Yeah.
This is
it was
always supposed to be Tether that did this, and yeah, I think it's a good little fire drill, because while I think USDC is going to be fine, you could see this sort of thing happen to Tether, and they might not survive it when it happens to them, because ultimately what's probably going to happen to them is their assets will get seized, right, at some point, is my guess, right, or in this scenario. And when the U.S. government decides to seize your assets, they don't hand them over, right? So that's the big risk with Tether. But having said that, everybody's been expecting that to happen for the past 5-6 years, and they've proven to be really resilient. So we've all been wrong about that, which is quite interesting. But I think yesterday there'd always been a thesis that in this scenario where Tether fails, you would see crypto start to pump at first because people would be buying crypto as a safe haven. So they'd probably go to Bitcoin and Ethereum most likely to try to get out of that position. So, and we actually saw that happen to an extent yesterday. So that was interesting because it was always a big hypothetical, and so we started to see a little bit of that yesterday.
I personally did it myself. I moved what USDC I had into LUSD and Hex.
Oh, okay. I'm sorry for calling you a dum-dum.
Well, no, it's great because I did it before the depegging. So
okay, good.
Yeah.
That's
there you go.
Yeah,
that's fine.
Yeah, and I managed to buy kind of the bottom of 5.5 cents. I don't know if Hex is it's definitely what 6.5, 7 cents now, something like that. So worked out at least.
Yeah, that's 7 versus USDC, So if
there we go. So worked out kind of short term at least. Okay, so guys, look, I had the pleasure of having you on talking about Famous.io before. You guys building out Fiat as well, the Aave fork, Famous, the GMX fork. Now I'm bringing you guys on. Part of the reason why I brought you guys on today was to talk about PHUX, which is I'm saying it right, by the way, am I?
Yeah, we like to call it the PHUX, but yes, you can call it.
Okay, PHUX, right on. What is this a fork of anything? Is this kind of like what is this a fork of?
This is a fork of Balancer.
It's a fork of Balancer. So, forgive my potential framing this way, but just put it in kind of an interesting contrarian way. Why does Pulse Chain need another DEX? Why PHUX?
Oh, well, it's always nice to have multiple price feeds first off, right? Balancer has something called a stable swap, right? Just so happens we're talking about stable coins already, right? But on something like Pulse Chain, where you have the V2, liquidity pools, the X times Y equals K, to get let's say 1% slippage on $1 million, right? You need 50 million on each side of the pool. So that's quite a lot of liquidity, right? And then even then, it's still a lot of slippage for that sort of trade for just swapping between stablecoins. You know what I mean? So you have something like Balancer where you have stablecoin or stable swaps where it's a lot less slippage because you can configure it in a much better way, in a much better weight. And then we think it's also really cool with Balancer that you can have multiple coins in a pool, right? So there's a couple things in the community that we can use with the multi-coin pools. Like the perfect example is the Maxi guys, right? They have plenty of those perps, right? You got the Maximus, you've got the Deci, you've got the 7-year one, the 3-year one, and then the 1-year one, right? You can stick all of those in a pool and have all of their liquidity in one place. And then you can also add, a USDC with it as well, right? And they can all trade amongst themselves and find their correct price. Whereas, right now, if you go and try and trade in and out of some of them, the liquidity is pitiful. Naturally, it doesn't, trade that much. But, if you, pair them all together in a nice one place, you'll be able to trade in and out. Probably have better order execution, and then maybe better price discovery as well, right? That's probably the best example. But there's other ones like for Pulse Doge and all of the stuff that they've made, with the ASIC token, Pulse Bitcoin, and then Pulse Doge, because I think, for instance, Pulse Doge doesn't have pretty much any liquidity at the moment, whereas Pulse Bitcoin or ASIC, one of the two, has a majority of the liquidity for their pretty much entire ecosystem, right? And then, you can use this for the Poly Maximus with Icosa and then Hedron. A lot of creative things that you can do with this stuff with the multi-pools, right? That would save you on fees if you're trying to trade between those on something like PulseX, where you're hopping between pools, right, a bunch, and obviously you're eating a fee that whole time. And then, there's this thing called bootstrapping, where, if you're a new project and you don't have the funds to really start your liquidity pool, you can weight it in a specific way where you can have less starting capital in the pool and have the weights. You're playing with the weights, and essentially over a period of time, they naturally migrate to the 50-50, the weight, right? And it's kind of easier on the founders of whatever they're doing and stuff like this. So we think that's pretty cool. We don't expect to be a overtake PulseX, right? That's not the goal here. It's more so of working in tandem and having multiple price feeds of a lot of these different tokens for the ecosystems, right? Because that really helps things like fiat, having different liquidity pools that you can kind of spread your risk out, right? So if you've got 5 million in this pool, and then you've got 10 million over here, and say the 5 million is on PHUX, right, and the 10 million is on PulseX, it kind of spreads the risk around instead of it all being in one place on PulseX. You know what I mean? And so when you're processing liquidations, you can go between these two pools instead of just one pool, right? And so it's harder for people to manipulate that. It's better for order execution, all sorts of stuff like that, right? So we think that being maybe the number 2 or number 3 DEX on Pulse Chain will be valuable, right? And then obviously the tokenomics. This is a free airdrop, right? There's no SAC for this. The tokenomics haven't been ironclad yet. So far, we know that it'll be an inflationary token. We know that it'll be airdropped to most likely it's going to be airdropped to the Fame and Fiat sacrificers. I don't know if it's been, Buck can probably comment on if it'll be to the PulseX and Pulse sacrifice set, but that would be cool. And then
we'll most likely make that happen. I basically, I don't want to guarantee anything, but
make promises.
That's the idea. I want to get a little bit in everybody's hands.
That's very cool. Right on.
So that they at least go try it out, or
exactly
at least go claim the token on Fatty.io. Because basically we'll be launching Efiat as well. I didn't
even mention that
ahead of this. So if I get everybody to kind of come claim it on Fatty, and they'll potentially start to use Efiat as well. So it's my way of it's like a gateway drug to the PH ecosystem, basically.
Very, very cool. Are we going to get a like an Ethereum version and a Pulse Chain version, or is this just launching on Pulse Chain, just launching an ETH?
So depending on how soon Pulse Chain comes out, so the kind of timeline here is PHUX in Q2, right, and Pulse Chain not being out yet, and then PHUX will exist on Ethereum first, and then it'll fork over, and you'll still have those same coins on PulseX, or I'm sorry, on Pulse, right? So unlike Efiat, where the Efiat forked over coins will not be supported, right? It'll be valueless. Whereas the PHUX coins, those will be the same. That'll just transfer over. It won't be, another PHUX, token allocation or anything like that. It'll be just, forking over and like following like what Hex would do or something like that, right? And then after the fork, obviously they'd find their own prices and stuff like that. But yeah, I didn't even mention that Efiat, I think that's probably weeks away from being on Ethereum. So that's pretty exciting.
That's actually very, very exciting. Awesome. And so are you guys kind of in the final stages, like wrapping that up? Any audits, any kind of, what's the kind of final stages looking like?
Yeah, so there's 2 audits going on. I think the one that's pretty much almost done is with Certec, if I'm not mistaken. And then the other one, I don't know, I forgot what the other one's name is.
Are we talking about Fiat? They're both done if we want them to be done. It's more like we just need to say, okay, we have no more changes for you guys to put into the wording. But yeah, Solidity Finance and Certic have both audited it and come back with no major issues. Yeah, we've spent close to $100,000 on audits for this.
Very fun. Right on.
which is a lot of money, and and especially for something that is a fork. But that's how seriously we take this stuff.
And so, in order to attempt to try to best understand this landscape here, so we're gonna have, and correct me where I'm wrong, Efiat and then Fiat on Pulse Chain. We're gonna have PHUX on Ethereum and Pulse Chain potentially, and then and then Famous just on Pulse Chain.
Yep, that's well, yeah, for the moment.
For the moment,
that's what we've committed to. I mean, it's possible it could go on other L1s. It's just we don't want to commit to anything and get people's hopes up. But yeah, we potentially would like to be multi-chain. So that's our ambition with these things. To the extent that we have supporters in different L1s,
right?
We will do that.
Is the sacrifice phase over?
Yep.
It's done. Yep,
it's done. How much did you guys raise? Did you guys know off by heart or?
A little over 10 million.
Right on. Congratulations. Is that 10 million across all three, or was that for what's that 10 million for?
That's just for Famous.
For Famous. Right on. How much do you guys remember how much you raised for or how much was sacked for Fiat?
3.6 million.
3.6. Okay, right on. Congratulations. Man, I'm looking forward to the stuff kind of being out. Are you guys waiting on any testnet version 3 stuff at all? What are you guys' opinions on the testnet version 3? Is it 2 weeks away? Is it tomorrow? How are you guys kind of viewing this kind of ambiguity with the testnet situation?
I don't really know more than anybody else does on this, but it looks like they're trying to sync it. They keep running into little bugs here and there.
Yep.
Software is hard. So yeah, the V3 testnet doesn't really impact us in any way. Like we other than it's giving us an indicator of how long we have until Pulse Chain's live for Fame, right? Mm-hmm. So it doesn't really impact anything else we're doing. So if I thought Pulse Chain were imminent, I'd probably be trying to push Fame along faster. But for now, I think we've got time on our side still.
I see. So you don't think it's within a month? If you had to speculate,
I don't think it's till this fall.
Do you think that's like for reasons of timing the market, or like what leads you to think that?
I don't think it's timing the market. If that were the case, you should have launched last year when FTX failed. So I think it's more that this thing is hard, generally a hard thing that he's trying to pull off, and he wants to do it right. And my guys seem to think he should test that V3, which is actually a V1, publicly for at least 3 months, is their opinion.
Really?
Better 6 months, to be honest. Maybe he won't want to. I don't know. But so for that reason, I think Pulse Chain takes a little bit longer than a month. I think we could have V3 within a month, but then I still think you're looking at a couple of months minimum before he launches. And I don't really see any urgency to launch either, right? He's not missing out on much, right? If anything, this stuff yesterday shows you that we're not quite ready for the bull market yet. There's still some dead weight that needs to be cleared out. I mean, the good news about what's happened with this SVB thing, the most consequential thing actually is that I think this means the Fed doesn't have to keep hiking as aggressively, because this gives them the excuse to say, well, we've killed one bank because of rising interest rates, and it's a major bank, not like a systemic bank like.
Yeah, I heard it was top 20 largest in the U.S. or something.
Yeah. It's not as big as Wells Fargo or those sort of banks, but it's still a pretty good sized bank, and its demise is basically directly linked to interest rate risk, right? So, which is funny because banks actually tend to make money in a rising interest rate environment. So they must have really fucked up. I really want to understand what they did wrong.
From the little I've heard, and I'm probably going to mess this up, but it seemed like they invested in 10-year bonds or 10-year notes that were illiquid, and they used depositor funds in order to do so. And because of the interest rate hikes, it was
they got marked down. That's what I mean by they must have royally fucked this up, because typically a rising interest rate environment is good news for banks. The reason why is they have this thing called the net interest margin, which is the differential between what they pay their depositors and what their borrowers pay them, right? And the higher you have in interest rates, the more cushion you've got basically to charge a bigger net interest margin. So a really low interest rate environment is actually difficult for banks because they're generally working with a very small amount of margin. That cushion gets really smaller when you're at 0 or 1, but when you're at 6%, it's a lot easier for you to charge borrowers 8% and give depositors 3.5%, let's say, and you get to keep that difference, right? So yes, their CFO must have really just managed their interest rate risk really poorly. He's probably not going to be be to the CFO of the Year conference this year.
I don't know if you heard the news, but apparently the CEO, CFO, a bunch of major executives were selling stock a couple of days, weeks before this all happened. So I actually looked at the numbers. It wasn't that much for some of the other executives. I think the CEO sold like 3 or something million. I wish I had the tweet pulled up. Maybe we could find it in a sec. But and I think one of the lower, I don't know if lower, but one of the executives sold like 50. So it actually wasn't that much, but it was a spread. Like the CEO was like 3 or so million. CFO was like 300,000, and then there was 100,000, 50,000 there. But how do you guys view that? Do you think they kind of knew what was happening here and trying to get out of Dodge? Or?
Absolutely. Of course they do. And they would sell those things to the extent that it's legal for them to do it. Right. Yeah. There's a very rigorous process for public companies and banks and whatnot when they do that sort of stuff that they'd have to follow. There's a lot of compliance, right? So that's normal. You would expect that. It doesn't look nice, and it's not nice, but it's also not surprising either. The CFO's job is sort of typically to maximize ROI, for, return on investment, and they do that, by basically levering up companies, right? And banks are basically pretty levered companies in general. They're financially engineered, and it's the CFO's job to do that. But sometimes they fuck up, and this happens, right? But it doesn't necessarily mean that all the other banks did it, right? These guys were just positioned entirely the wrong way, and it's not entirely surprising given that they're in California, serving all these tech companies, right, that have very long time horizons.
Yeah, right? I heard they're giving out loans to like brand new companies with no credit, no history of anything, and just with like depositor funds as well. And it was even worse than that because apparently those depositor funds were marked as like I forget the exact terminology they use, but and basically like very, very safe investment products, but it turns out they were just being loaned out to like these a brand new like tech company that says like, oh, I'm gonna make the new like Uber or whatever. It's some guy with like no credit, no history of anything. So
well, I mean, that's their job, is to lend money to corporations, right? They're
right, but they misrepresented themselves to
but that's the point, is they're supposed to do it wisely,
right?
it's a good lesson actually for everybody. And this is why people like to park their money with Wells Fargo and JP Morgan. It's because those banks are too big to fail, right? And they don't serve just specifically one niche group of demographic of people that can potentially just get annihilated. They're serving U.S. commerce broadly, right? So it's not entirely like the analogies to 2008 where this is similar is you had like these sort of real estate lending companies that were the ones to fall over then early on, and this is just showing you something happening in Silicon Valley. So I think you'll probably see more ugly stuff there because that's where the excess was.
Right. Yeah, it seems like from the little I've heard from these fund managers panicking, it does seem like there is quite a bit of excess. But I'm kind of curious, given the news of this bank falling, given the somewhat recent news of FTX and all this stuff, are you guys worried about potential new wave and onslaught of kind of regulation coming to this space? Are you worried that kind of regulators are going to just have a knee-jerk overreaction and kind of over-regulate or regulate the space in a not intelligent way? Are you guys worried about that at all? Is that a consideration with
that's definitely coming, and it always happens every time there's a bubble that pops and there's corpses. So we've had corpses in crypto, especially in the kind of tech side of it with Celsius and all these things. The kind of fintech side. So I imagine anything that touches that is going to be a very miserable place to work because they're going to have a whole compliance regime. And
are you worried about this affecting our niche, this crypto specifically?
Well, I don't really worry about us so much because in a way we've kind of insulated ourselves as a community from all of this because of Richard's very strict views on hating CEXs and all these stuff, and us being very DeFi native as a community, right? Like I basically never use CEXs, nowadays. So that stuff doesn't really affect me that much, but it affects a lot of other people. But yeah, that's definitely coming for crypto. They're gonna come after a whole bunch of stuff, and they're gonna make it a lot harder for teenagers to buy crypto and spend their life savings on it. They're going to put more protections into it, which is probably, I hate to say it, but probably the right thing to do to an extent.
I don't know, man. I remember being a teenager and wanting to trade stocks, and unfortunately, I had to be 18. I had to go through my dad to do it, and I hated it. So, but I can see why not allowing 15-year-olds to buy Dogecoin. Might arguably be a beneficial thing for sure. I wanted to ask you guys about one particular thing that I've had like an axe to grind with this issue, specifically in regards to our community and like Richard Hart. And what I'm trying to bring up here is the issue of white papers, where I personally view a white paper as a very useful tool where you can find an official source of design intention and tokenomics. Now, Richard has made noises and he doesn't like white papers. He thinks there's like some weird marketing thing. But I think a white paper is very useful because if you don't have a white paper, an official source to go to in regards to design intention and tokenomics to figure out what's going on, you essentially just have to ask dudes on Twitter. And while it's fantastic, kind of spread the word, and that's kind of this grassroots way of spreading the word is typically what needs to be done. But it is kind of a funny thing to do. Like, man, like guys, I've had some conversations with serious investors with serious money, and one issue that I've heard that I think is a friction point for a lot of money potentially coming into any ecosystem is like not having an official source where you can go to find the official inflation rate, the official design intention. Like having to go do a dude on Twitter and ask him personally is not a solution for a lot of people with like serious investors with a lot of money. So do you guys see where I'm coming at with this? Like, what's your view on white papers?
I think that they're very useful. I agree with you. I'm assuming you're speaking on like Hex, right?
Yeah, Hex has no white paper. Like if you want to find the inflation rate, whatever the tokenomics, you just gotta like ask some dude, or like I know there's the unofficial white paper, but there's no official source.
Yeah,
You know what I'm saying?
I hear you. And I mean, to delve even deeper into, how to really calculate or figure out exactly what the inflation was for last year, right? It wasn't even 3.69%. It was like 1.6% or something like
That
that.
was like
Inflation.
realized. Yeah.
That was like, yes, realized inflation last year.
Yeah.
And it's the Hex is so nuanced in that regard, where you have to take into account, okay, how many t-shirts are in the pool, how much liquid supply is available, are people end staking properly, are they are people emergency end staking, or are they letting shit bleed? And then it's that causes an issue where they're like dead, it's like dead weight, and you're not really getting you're getting diluted, right? Because little known, if there's people with lots of t-shares that their stakes are not expiring, but are past their due date, right? They're no longer collecting that daily t-share payout, but they're taking up space in the t-share pool, so they're diluting you, right? Which is that's not cool, right? And you have to take that into account. That kind of lowers the inflation in a way. There's a lot of nuance into figuring out exactly what's going on with Hex. So yeah, I mean, I agree with you. It would be useful to have a white paper, and even like a GitLab or something like that, right? That would even work too. And speaking of that, like we have a GitLab that has yet to be posted, I believe, but you'd be able to find all the resources that you need for shit like what we're doing, right? But yeah, we haven't had one that's completely and full done in a while, right? But yeah, no, it would be nice to have that for X, but
we don't.
it's kind of hard to put your finger on it. Like, who do you know besides maybe a couple of niche people that actually go and read the white paper and like, okay, I fully understand what's going on, and now I'm going to buy a lot of this thing. You know what I mean?
I totally get what you're saying. And for the retail, it's like a complete non-issue. But I know for a fact it's an issue for people with like I'm talking about like the investment fund space. I've managed to talk to some people, and it's like serious people with serious money. And it's a friction point for sure.
Really?
Yeah, it is. It also is. Yeah, Buck, I know you got to go. Buck, if you've got to go here soon, let me know. Were you able to hear?
I'm back. Sorry, guys. I just had to take care of some
Another
business
spider.
at home.
Oh, okay. Spiders are a menace. You take all the time you need. But no, Buck, were you able to hear any of that question?
No, I missed it. Sorry.
Okay, I'll try to kind of briefly repeat it, and hopefully I can do a better job this time. So I've kind of had a little bit of an issue in regards to kind of the Hex community and how Richard Hart views white papers. For me, I think it's actually an incredibly important thing to have something like a white paper, something equivalent to a white paper, an official source where someone can go to and read the design intention and tokenomics as described from the project team, project founders, and I think not having that is a friction point for certain kinds of money potentially like coming into the space. Like for example, I have managed to rub some shoulders with some people from the investment fund space, serious people, serious investors with a lot of money. And the fact that there is no white paper for Hex, no official source where you can go and figure out the nuances in terms of inflation rate, staking, like to figure out the nuances of Hex today, you just gotta like ask people on Twitter, like watch YouTube videos. I know one of the devs did like an unofficial white paper, which is all well and good, but the fact that there's not an official source for design intention and tokenomics, I view to be a problem. Do you agree with me on that? And will your ecosystem, the projects you're building, have something like a white paper?
Yeah, it's interesting. I never thought of that. I think a Hex white paper would look very stupid So I think
so?
that's probably why we don't have an official one.
Why so? I'm curious.
Well, because like it would have to like explain all the how it all works and all this stuff, and then what you basically understand is that you have like an inflationary token, and that posits itself as a term deposit, and that's about all you could say in the white paper. But the reality is that Hex is way cooler than that, and what's cool about it is what you don't understand underneath the surface, and to that extent, you're right. You have to go talk to people in the community that really get it. But so like I don't know. It's like it's like going to a magic show. You don't want the magician to tell you how he does the trick. It won't be as cool, right? But I hear what you're saying.
It's not a good enough answer for LPs, man.
No, I get it, but that's not been his target, right? I mean, if you want to get private equity guys investing and shit like that, then you do exactly the opposite of everything Richard's done, right? He's done pretty much everything he can to
that's a very good point.
Isolate himself from those types of people.
The
website. I remember being in my office in 2019 when the Hex website first came up, and I literally pulled my colleagues aside and said, "You guys got to see this website. It is the scammiest looking thing I've ever seen." And everybody looked at it, and it was just like, "You got to be fucking kidding me! Who would ever invest in this?" It's like this like weird space website, like with I don't know, it was like neurons or something. I can't even remember exactly what it was, but and it was just talking about I think Hex is the best investment opportunity I've ever seen. With the potential for a 10,000x. It literally said this. Like, you're never supposed to say things like that if you're talking to private equity guys or real finance people. Like I literally like you'd be thrown out of the office if you said something like that in a meeting. You know what I mean? Like it just completely incredulous.
Yeah, it's very funny the things they do pay attention to. Okay, that's your view on Hex. What about your projects?
Our products. Yeah, I would like to have a white paper. Maybe if Dylan gets off his ass and writes one, that'd be great. I mean, what we're doing is forking stuff, so you can look at the white papers of what we're forking. So that's the good news. But we could put a Fiat logo on top of the Aave white paper, and that would kind of more or less tell you what you need to know.
just copy and paste a little bit of Photoshop. Okay,
that's right. Yeah, that would be a lazy man's way to do it. But yeah, we probably should have fancy white papers. We haven't gotten around to it yet. I think most of our demographic can't read anyway. So, or at least they like things with pictures more so than words. So, yeah.
I hear you, but just again, just to bring up the personal anecdote, and this may not be anything worth considering at all, but I do know that this particular point is a friction point for at least a dude who invests in the fund space and has money. So take that for what it's worth, I suppose. Look, it has been kind of an issue for me, and so look, it's funny, man, because there's this fund space. I'm gonna get off this, but it's just I find the fund space so funny. It's like all these incredibly intelligent people all asking the wrong goddamn questions. It's just questions geared towards just like traditional investment opportunities, which is reap just the shittiest reward, like ROI. And anyways, getting off that topic, I wanted to ask you guys a little bit about Fatty, because you guys just said you're also working on kind of Fatty, which kind of just tracks investments kind of thing. Will Fatty track both the Ethereum side of things and Pulsar side of things? Because like what I'm trying to get at here is, we have like
it already does.
Pulsar, it does. Okay.
Yeah. So if you go to Fatty right now and you just go on one of the public bundles, you can already see, for instance, if you click on maybe Godwell's wallet, right, you'll see his Pulse Chain testnet assets, as they are right now, and you'll see he's a trillionaire on on testnet, so which is pretty cool.
Yeah, that's why we did Fatty, by the way, was because I imagined it was going to be a very complicated thing that maybe DBank and Xeron and Zapper maybe don't want to be involved in, having two identical system states kind of clogging up their thing, confusing people, right? So I said I'll build that for the community in case they don't, and with no plan to monetize it really directly. So that's exactly why we did that. Because I think it's going to be quite confusing at first, because you're going to have a hard time finding information. Because I think a lot of the PRC20s are going to be hard to price.
Right.
Yeah.
Okay. Now, just to perhaps bring things back to PHUX here, if I can attempt to summarize, and you guys let me know where I get this wrong and correct me, what kind of, at least some aspects of the use case is that it's essentially, it's helpful to have another DEX where there's liquidity pairs, or although I'm not, would you even call it liquidity pairs if there's multiple tokens in the pool?
Yeah, you call it a pool. Yeah,
okay.
Exactly.
Sure. It helps with, please go on.
I'll give you the elevator pitch real quickly.
Okay,
for PHUX. So yes, it's a DEX. It's a DEX that does things that Uniswap can't do. That's useful. So these pools allow you to basically pair like assets against one another and to really efficiently move between them. So the biggest use case for that is actually with stablecoins, ironically, given what's happening right now. So Curve does this as well. So Balancer could be a major competitor for Curve. It's just that all the liquidity is really wound up on Curve, and it's the deepest kind of pool of stable coins currently. That doesn't necessarily need to be the case on Pulse Chain. And so far, we're the only people that have provided this solution for Pulse Chain that I'm aware of. Right. So that means, potentially we could have the deepest pool. So you could actually think of this as like a Curve fork if you wanted to put it simply. So that's one major thing that we're playing for here. The second thing is you can basically index tokens and provide LP and basically earn broad exposure to a basket of crypto as opposed to just two cryptos. So let's say you want to just provide LP across Pulse and PulseX and Hex, rather than just getting the return of one of those tokens, you can get all of them. So you're better diversified, right? So you can think of it almost like investing in a fund, right? When you provide LP in some of these pools, so that's quite useful as well. What else does this do? This has a bootstrapping mechanism that allows people to launch tokens in a more capital efficient way. So if you're not a millionaire, you don't have to provide millions of dollars of liquidity when you create your token, which is important as well. So why are we doing this? We're doing this because we also want to be on Ethereum even after Pulse Chain comes, because we think there's a lot of value in having a place in both L1s, and these tokens are going to continue to exist on Ethereum, and they're going to continue to trade and have value. Richard hasn't created a plan for that, but I think the majority of the returns will be on Pulse Chain, but the majority of the value will be on Ethereum. So we want to basically have our toes in both ponds, if you will. So that's why we're doing this. And then the kind of main reason as well to have a second DEX is it makes your pricing more robust because it's harder to manipulate, right? So if there's only one price source, bad guys can come attack that pair, right? But if you have another price source on another exchange or another DEX, they then have to go attack both of them in order to make that work. So it should make things more robust. And the reality is this is a very easy thing to do, to create a DEX. So I don't want some idiot coming in from outside the community doing it and basically siphoning money away from the community. I'd rather build it for the community, give it away basically to the people that we're working with here, and basically keep that second, third position for for the community. If you look at Balancer, it's worth about $300 million, which makes it kind of the second or third biggest DEX on Ethereum, right? Depending on how you look at it. Uniswap's worth about $3 billion. So, it's not utterly surprising to me that the biggest DEX gets the majority of the value. But still 300 million is still trading within an order of magnitude or so of Uniswap, which is interesting. So, if you apply that logic to Pulse Chain, PulseX is obviously going to be the biggest DEX, but I think it's pretty logical that the second biggest DEX will trade at at least 1 or 2 orders of magnitude, right? So if PulseX is worth $1 billion, that would imply the second biggest DEX should be worth somewhere between 10 to 100 million, right?
Right.
So if you could create 10 to 100 million dollars of value, wouldn't you do it?
It's not bad. Yeah, I'd say so.
And if you could create that and give it away to the community, wouldn't you do that? Yeah, why not? Because like I said, I'd rather them have it than some Jeet dev that shows up,
right?
With the same fucking idea.
I hear you. Yeah. Now, one thing though, in regards to better understanding the token, what's the utility to the? There is going to be a PHUX token, correct?
There is, yeah.
And so, is it a governance token? Is it what's the utility behind this token?
So it is a governance token, but it will also accrue fees, like all our other tokens. So it will be inflationary, unlike our other tokens, though. So that's one thing. That's one thing to keep in mind. I think by being first mover in this or second mover, depending on how you look at it, we're actually first mover in a sense because we are going to be on Ethereum first when PulseX isn't, right? Which is interesting. So like we're actually going to, people are going to be using this to transact many tokens even before Pulse Chain exists, I think, most likely. And then we're going to be basically second mover on Pulse Chain because obviously PulseX is already going to exist and have deep, thick liquidity. But we're going to be there on day one when that snapshot happens and Pulse Chain goes live. I think it's pretty likely that, and because we're giving away the token pretty broadly to Fiat and famous whales, as well as community members from the Pulse and PulseX sacrifice, I think it's pretty likely that the community will coalesce around us as a second DEX, right? More so than somebody else who just shows up on day one and says, "Hello, sir. Here's my DEX."
Right. Yeah.
You're going to be more likely to use this one because you've already probably been using it on Ethereum for stuff, and also, a lot of people didn't understand why I accepted all these things for the sacrifice. Right? They're like, "But Buck, this thing's terrible. It's going to go to zero." Or it's,
Is there anything you could possibly be referring to?
Yeah.
What could you be referring to?
And what they didn't know is that I had this evil plan in my mind, which is that I'm going to have this DEX, and now I've got the ability to create pools of all these tokens and be a pretty major liquidity provider to all these communities. Someone shared a thing the other day. We're the number one ICOSA wallet. We're the number 10 Hedron wallet. We're up there. In maxi perps. I think we're 3% of maxi perps Sorry, not Maximus coin. Sorry. We've got a lot of these things. So a lot of people were like, what the fuck is Buck doing? Taking these things, he can't sell them. And I was like, well, what if I don't want to sell them? What if I want to just create a pretty solid DEX that serves not just RH coins, but everything else that's being built? Wouldn't it be great if I had the starting liquidity to do that? So yeah, you asked earlier how much we raised. So we raised about $10.5 million. So good luck to anybody else that wants to come compete, because there's a few people that could. The OA is one of them. He could create a second and a third and a fourth best DEX if he wants, but I don't think he's going to do that. Maybe someone like Liquid Loans could do this, but they probably don't want to, right? They've got a great business with what they're doing, and they just want to focus on that. So I think that's pretty interesting. So who else is going to be able to come in and compete against us now in this regard? And basically, the people that have sacrificed for my projects are the biggest people in Pulse Chain, right? It's the biggest sharks and whales and all that stuff, and they have the most incentive now to use this thing, probably more so than PulseX even, right? Because they're probably going to end up owning more of this than they own a PulseX, even if they sacrificed fuckloads of money for PulseX. So I feel like it's pretty likely that we're going to have that, second or third best DEX. I'm actually pretty excited about it. And the nice thing about these DEXs is it doesn't even matter how dumb your name is, because most of us are going to use 1-inch style solutions, right? I don't even care anymore how my orders get filled, right? I go to 1-inch and it uses Fusion, which is quite cool, right? And I can, basically my order gets filled. I don't even care how it happens. But what's going on behind the scenes is there's some sort of transaction happening somewhere, right? And they're finding the best execution, right? So odds are, if you're going to be transacting in Hedron and Icosa, let's say, there's probably going to be a better than 50-50 chance that you're going to be using our exchange to do that, right? Because with those pools, we'll probably have the best execution on many things, right? Because we can put Hedron, Icosa, and Poly Maximus in a single pool together with USDC, right? So, and that can be a pretty thick pool, right? And if you're whales in any of these things, I would encourage you to, that has the idea that you want to make these things thrive longer term, I would encourage you to become LP providers in these things as well. And it's really nice for you as well, because when you add, let's say you own a fuckload of Poly Maximus, but you don't own that much Hedron. All of your exposure is to Poly, right? But now when you provide LP, you actually have exposure to the whole pool instead. So it actually diversifies you when you become an LP provider, which is very useful, right? So there might be some guys out there with just truckloads of Hedron. And now they can have exposure to 3 or 4 assets instead. So I actually think this could be pretty cool. It's really early days. Like, normally I wouldn't tell you guys all this, but because we're giving it away, I just wanted to basically, I could basically just tell you guys we're doing it. There's no expectations then, because we're just giving it away. It's I think it's potentially actually a really big idea, and I don't even have to do that much to promote it, other than what I've already done, just because of what I just explained there, in terms of a lot of this just comes from 1-inch style solutions anyway. Yep. And because I've already got the community behind us, and probably the deepest liquidity after the OA. And I think it's unlikely anyone else will even bother. So I know the Power City guys are creating their own 1-inch style solution.
Yeah, they're trying to do everything.
yeah, they are. That's great. So when that thing runs, if you use that to transact, probably it'll look at your options on Uniswap. It'll look at your options on PHUX, and if you happen to be trying to buy or sell Hedron, the odds are you're probably going to end up using us at least half the time. So,
man, I wanted to keep this interview an hour, but I have like 4 or 5 questions still in my head just from what you said. So one of those questions, is there any more or less risk in terms of impermanent loss, smart contract risk in general in participating in these multi-token pools, or is it somewhat comparable to like a regular, 2-pair LPs? Is there could you explain the risk with these multi-token pools?
Well, I guess the answer is it depends. So
there's resources on Balancer where you can find where you can track impermanent loss versus a 50-50 weighted pool, a 60-40, an 80-20, and you can see the impermanent loss curve relative to the token price and all that stuff. So it varies between what's going on. Also, like with the multi pools, if you're all in the Maximus stuff and it's all in one pool, then you basically have a staking ladder. It just depends on what the hex price is doing at the time.
So if you put really disparate assets, that trade really differently, I imagine that could lead to some pretty big impermanent loss. But what I'm thinking about are things that are broadly connected, right? Now it's up to you what you put in a pool. Right now, there's definitely pools that we're going to build and we're going to promote and we're going to incentivize you to use with the token as well. But if you create a pool of, rug pull asset 1 and rug pull asset 2 and USDC, you could probably expect
some impermanent loss.
Some impermanent loss, yeah.
Right.
Yes, but if you look at Maxi, Deci, Lucky, right? So 15, 10-year, 7-year hex staked, basically. They should trade similarly, right? So hex price goes up, the value of those 3 assets should move up in tandem together, right? They're effectively the same bet on the same asset, just at different time horizons, right? So you can have them trade a little bit differently, but not too differently, right? So, that's an example of things that I think are pretty related. I think Hedron and Icosa, it's part of the same ecosystem. They're connected to each other by their user base, by their founders. I think what's good for Hedron should also generally be good for Icosa, right? They can trade differently, of course, but it's not like it's not like Hedron's going to go to 0 and Icosa is going to go up 10x.
Right. Yeah.
Right. Yeah. They're going to be connected. And Polymaximus, which I think Dylan probably knows better than I do. I think Polymaximus is Hedron staked. I don't even know.
Pretty much.
Yeah. So you could throw that one in there as well. So.
And I mean, you wouldn't really get much impermanent loss on that, right?
Yeah. So we're actually, I think, a pretty good force to be reckoned with. And I guess the other thing I wanted to kind of explain here, Brandon, is if you think holistically about everything we're doing together now with Fiat, which is borrowing and lending, Fame, which is leverage perp trading, now PHUX with the DEX, so just straight up swapping, indexing, stable swaps. It starts to make a really nice little ecosystem. And then what ties that all together is the FATI user interface, which I've now got 2 devs working on full time. So that and that continues to get better. It's nowhere near where I want it to be, but we've got all these 3 major protocols that basically are horizontally integrated. Would make it a DeFi equivalent of Goldman Sachs on Pulse Chain, right? We're basically doing all the stuff that Goldman Sachs does through DeFi protocols.
You guys are cornering a nice little slice of the DeFi market on Pulse Chain.
I think so, and on Ethereum, hopefully too. Like in terms of, we're going to be a niche provider, to the Pulse Chain community, the same way Silicon Valley Bank was a niche provider of banking commercial services to Silicon Valley. hopefully we'll manage interest rate risk better than they did.
Right. Hopefully.
Yeah, it is a nice little niche, but
Yeah.
we're also not a threat, right? And like I said, I'm relatively long term about Pulse Chain. If we don't do these things, I know that some asshole like CZ will show up, and actually, I mean, they're coming no matter what, right? But they're gonna have to compete with me now,
Right.
and
the community.
I've basically spread out the ownership of these protocols pretty well amongst the community, right? Thousands of people sacked for Famous, and Fiat, and so and we're just kind of minority token holders ourselves in this single digit token holders. So so it's already pretty well dispersed throughout the community. So I'm hoping people will kind of realize that we're going to be sort of self-sovereign in a way as well. So we don't depend on these other protocols to come to us. We already have all the solutions. They're already owned by the community. So I think it's actually really, really useful. And then, if Pulse Chain has any success, I think these things are going to do really well. That's my view.
Right. Yeah. I would concur.
The biggest risk is Pulse Chain. Honestly, that's the biggest risk.
Right. Yeah. The goddamn man, it's so fun. It's been a 2 year. Well, it's been like a 2 year journey at this point, hasn't it?
Yeah.
Yeah.
I believe so.
I mean, I'm used to investing with that kind of time horizon, but I get that feels like a century to crypto people.
It does. It feels a little long.
Yeah, it feels a little long. Yeah. I mean, I buy things and I generally never sell them,
especially for those who over leverage. Anyway, but guys, look for those excited. When Fiat, when PHUX.
So Fiat's coming. Fiat's coming later this month on Ethereum. And
we're not talking about testnet. We're talking about launch mainnet.
Talking the good stuff.
Yeah, the devs say they've got no more engineering hurdles per se, so they're just doing admin stuff.
All right, you guys are gonna choose to fork something else all of a sudden.
Yeah, we're actually doing compound, guys.
Okay.
Yeah.
Okay. All right.
Yeah.
Well,
so I mean, I don't have a date yet because it's I think one day they'll tell me, okay, it's happening, and I'll be like, oh, okay, cool. Thanks for the heads up, guys. That's probably what's going to happen. But this week we'll basically finish off the balances for the sacrifice. We'll make sure everybody checks those and is happy, and then we're going to issue the token once that's done. So that'll start trading, and we'll launch on mainnet probably with reasonably strict settings. And just make sure everything's running well and working properly. But over time we start to relax those settings, if you will. So it's not like on day one you're going to be able to come, degen, $100 million of hex, right? We're gonna have very strict settings around all that stuff. Because we want to just have a proof of concept that this thing's working, and let that hopefully run for a couple weeks like that. Go ahead.
Can we expect PHUX to be launching in somewhat of a comparable time frame to Fiat? Efiat?
No. I mean, we could if we didn't do anything new. Because it's already up on testnet, right? It's already up on Ethereum. It's pretty straightforward. But yeah, we're gonna make some changes to it. Okay. And also we need to think about what we want to do with the tokenomics exactly and the distribution of the tokens. None of that stuff's final yet.
Okay. I'm looking forward to reading about it in a white paper.
But yeah, the idea, the real reason we looked for an extra project we could do easily that we could basically give away to the Fiat people who use Fiat to get them excited about Fiat. So, you know, obviously there's going to be an airdrop, but the main way to get the token is going to actually be to borrow on fiat, right? So you're going to get paid to borrow, in essence.
So it's essentially also like a reward. It's governance, but it's also a reward token for
It's going to be distributed as a reward token on fiat is the plan, right? So that's part of why we did this as well. So we want people to take the plunge and use fiat. So that's one way you can do it.
I hope you guys kick off his ass, to be honest. That'd be great to see.
I would, you know, if we could get 1% of, you know, what they're doing,
that'd be nice.
That would be fucking nice, because no one was expecting that, were they? You know what I mean? You know, like we were launching this for Pulse Chain, right? You know, so yeah, we'll do some things Aave can't do, and we'll do some things Aave won't do. You know, because maybe they don't trust the OA, right? You know, we implicitly trust the OA not to fuck us, but but Aave may not, right? So
yeah. So Aave just seems to be just under a $1 billion market cap currently. And again, this is the bear market too, right? So
yeah, it was several billion. And the other thing about Aave is their tokenomics are terrible.
Oh yeah,
right. If Aave had the same tokenomics, if the Aave token had the same tokenomics that ours had, it would be worth way more money. Way more money. Yeah, because basically you're not really getting the fees of the protocol with the Aave token. It's a governance token.
Yeah, it's such a shame that there's like this holier than thou attitude towards giving any kind of consideration towards tokenomics. Oftentimes with some more, I mean, it sounds funny to say, but like traditional crypto space, even though crypto is so like innovative and so new in and of itself. But
yeah, you could argue that was the 2017 kind of era of tokenomics, I guess.
Yeah, you know, it's worked for them. They're doing great. So like, you know,
it worked out.
That's true. But I think it's just an important point to make is just that that their tokenomics are just different. And so like when you do a comp and say they're worth $1 billion, it's like that. I'd say Aave is actually worth 10 billion, right? If you like in terms of what those fees are putting out. So it's actually understating its value. So you know, what's 1% of, you know, 10 billion? You know, it's a lot of money.
100 million.
It's 100,000.
It's $100 million. Yeah.
Oh, so 10 billion. Oh,
it's 100 million. So yeah, if I could launch this on Ethereum and get, you know, 1% of Aave, I'd be pretty happy with myself. You know, and I think the Sackers would be pretty happy with us as well.
I think the Sackers would be very happy. Yes,
that could potentially be worth more than fiat on Pulse Chain, depending on how Pulse Chain goes. Just, you know, if you think about it, right? Just because, and this is what I talked about earlier, this is why you want to be on both chains, right? The ETH has hundreds of billions of dollars locked up on it, right? In value, right? So if you can get it, that's why the big boys spend all their time there, right? You know, so if you can get a slice of that, that's worth, you know, way more than, you know, dominant market share on Pulse Chain, right?
Right.
But we're going to try and have a bit of both.
How much consideration have you guys given to these ETH scaling solutions? Because a lot of DeFi, a lot of projects. I mean, GMX launching what is it, Arbitrum or Optimism? Have you guys given any consideration to potentially launching on those?
Yeah, of course. The problem is you know, the main thing, the valuable thing that we've got is the community. I don't have enough people from outside this community yet to really go there and be competitive.
You think so? I feel
mean,
like
I could, but yeah, it's like
it's a greater risk, I suppose. It's
no, it's just like, and it's, you know, like in terms of all the other work we have to do. The first thing would be to do what we've promised.
Sure.
But yeah, it's a possibility. I'm interested to see what happens to how the dynamic shifts for us as well once we have a couple tokens trading, because that really underpins, you know, people really paying attention to you. Nobody cares about you when there's nothing that they can make money off of, right? Except for, obviously the people that sacrifice. But even those guys, they send you their money and they go away and they disappear, right? And they come back, later, right? But once we actually have tokens
People with
trading,
lives.
yeah, people with lives, I know. But once you have tokens trading every day, especially if you can show good returns, I think that means you'll actually have a lot of interest.
Gives you more credibility moving forward.
Yeah, it gives you more credibility and whatnot. And one thing I get like constantly, not so much anymore, but it's just like people are like, "Who the fuck are you? You're a scammer." It's like it's gonna be really nice having these things live because I can just be like, look at our body of work now, and we've got two big audits. We'll have protocols running on Ethereum, multiple protocols running on Ethereum and on Pulse Chain when it comes. So it's like, no, we're not fucking scammers, obviously, at that point, guys. It's pretty clear that what we have is more valuable as a functioning set of protocols than as a rug pull, right?
Yeah.
Yeah.
And I mean, if you guys can deliver on just functioning protocol and get any kind of users, that's like quite an accomplishment, guys. Like that's something to be proud of for sure. How do you guys view that, like in terms of the challenge? Do you guys do you guys allow yourself to even think in terms like that? Like, hey, do you guys realize that like this is like do you allow yourself to take that in? The fact that this,
I do. I don't think the boys do. My partners in this, I don't think they even really understand like how big a deal it is, right? They love numbers and code, and they're not big on human interaction,
right?
For them, it's like. I think the satisfaction for them comes from the actually building something that functions. But yeah, no, I look at the community in a big way. I think this is why so those same guys that I was looking at the website with in 2019, are now my partners in this, right? And they still don't really get it. They still don't really believe it, right? Because to them, they just look at everything from like an engineering perspective, and they just go, "Why do you need Pulse Chain? Like it's not even any better,
right?
Yeah. What's the point?
Oh, it's like 2-second faster blocks, I suppose.
Yeah, maybe. Yeah, for now. But like what is the point of this thing? It's like, don't you understand? Like the point is actually the community.
Yeah.
And they're like, yeah, but the community is full of idiots. It's like, yeah, that's true. but there's a lot more idiots in the world than smart people like you guys. So you want to have mass appeal, right? The kind of more esoteric, fancy protocols that they tend to like, and the branding that they tend to like, doesn't appeal to the Hexagon community, right? Nor does it appeal to average people. But I think two seals embraced in a loving act on some colorful gradients really appeals to the inner degen of the average Hexagon, as to the word that is French for seal but sounds like fuck. So it's interesting, and I guess
it definitely catches people's attention whenever I say it, for sure.
Yeah. Well, I think it really just shows you the value of bringing different types of people. That's the big lesson for me in all this stuff. Something that I already knew, but like I'm really just gobsmacked by it every day. Is you really need to like poll and talk to everybody and just see the different kinds of perspectives that people will have. And you can't do it all yourself, right? A lot of guys, a lot of coder type people, especially, they try to do all these things with no feedback from normal people, right? And it's because they don't care, right? They do things the way they want to do it, and I think ultimately it's really good to go out and talk to different people and get their perspectives and bring in different types of people, because I can't build these things.
Right.
I don't have that kind of brain. Right.
Coding is very difficult. It is not like you ever see those commercials like on YouTube, like, oh, learn how to code. It's like, guys, I don't know about you. I fell into that trap where it's like you buy a course, or you like even like Oxford or whatever, Harvard, they'll post like courses online for free on computer science. Do not fall for the trap unless you are the kind of like a very specific kind of. It is extremely difficult. It is not straightforward.
Yeah, no, it's not.
It's very, very difficult.
It's not something I'd want to be good at either. Okay, like there's nothing about that is appealing to me. You know,
it's like learning a new language when you don't even know where to look to learn the language.
Learning a new language is great. I speak 5. Yeah. Okay.
Oh, really?
Learning languages is great because you know what? You get to go there. You get to try the food. You get to sleep with the women. You know, like it's an awesome, fun thing to do. Learning languages is great. Coding to me has absolutely no appeal, right? Coding, you know, there's no wine. There's no museums you get to go to, or like places with nice beaches. In coding, right? No, coding sucks. Like it's not something that I'm interested in at all.
It's difficult.
Right? It's difficult for you and me, definitely. Because to me it sucks. But I guess that's kind of my point. It's there's things that I absolutely cannot do, and there's also things that they absolutely cannot do, right? And
everyone has their strengths.
Yeah, I mean, really, and the other thing, like advice that I would give to younger people, is your strengths and your weaknesses are the same thing typically, right? In reality, so like I don't have a very good attention to detail, right? It's something I've had to conceal and lie about in job interviews for most of my career,
right?
Because if you generally speaking, when someone hires you, they don't want you to be the visionary, right? They want you to just shut up and do your fucking work and do all the admin stuff that they don't want to do, right? They want to be the visionary, right? So I think in general, with these things, you need to kind of get different perspectives from all these different brains, because we all actually add weird value. Some of the dumbest guys I know in the community, like the flat Earth guys, they actually.
Hey, hold on! Don't
pick on the flat Earth guys.
I'll send you some links, man. I have some articles I can send you. Don't be
Well, I mean, you're on the moon right now, so I think you.
It's pretty round behind you, man.
That's right. Oh shit! Yeah,
there's really a spherical picture of the Earth behind you. So
this is all CGI. It's not you don't understand that. It's all CGI. Yeah. It's an ironic thing.
But like one of those guys is a really lovely guy, and he's actually got an amazing attention to detail, and he's got very good like artistic senses, right? Something I have zero of, right? So every time I make a logo, he's just like, "Oh, you gotta be fucking kidding me! Why haven't you seen this little thing?" And it's like, "What little thing?" And it's like he has to like explain it to me for like a half an hour before I see it,
right?
But he's not wrong. He's right. And it's just like, it's the kind of thing I would never, ever notice, nor would I care about. Right. But he's just got one of those weird ass minds that like, no, not weird ass, but just, it's just amazing how
unique. Yeah.
Yeah. Like so he can do something like that. So well, so easily. Right. And the cool thing about crypto is you get a bunch of these people into a Telegram, and you get a pretty good survey of abilities, right? And because these people are, sacrificed or involved, own your token in some way, they're incentivized to come help you, right? So it's actually very cool, right? So it's really true that these things aren't securities in the sense that these people provide. When you buy Apple stock, you don't go fucking volunteer at the Apple store, right? You know what I mean? So all these people, come in and, provide, feedback, and they'll do really useful things. Like I've got one guy who's like an SEO expert, search engine optimization.
That's so,
and he's just like, gives me like a whole list of things that I should be doing better. right? Okay, thank you.
Yeah.
You know, if I had to go figure that shit out myself,
it sucks.
it would take me years, right?
Yeah.
You know, so it's almost like a little village, right? You know, in a sense. If I need medical advice, I can go get it from
Words.
you know,
your own commune.
one of the guys I know who's a Ivy League doctor, you know, in the community. It's really amazing. So, you know, if I need, you know, legal contacts, you know, the community's there. You know, so it's actually very powerful to get all these different perspectives and abilities from the community, and it's going to get better as we get bigger.
Yeah, the power of community, that's a very, I feel like perhaps within kind of like the hexing community, I feel like we more so realize the power of that. But outside of this community, man, I don't think people get it, at least to the same extent, like the power of community.
Yeah,
Because, you know, I feel like that's one of, if not the largest differentiating factor, you know, between kind of the hex community and other things, man. Like before I found the hex community, you know, I was the kind of guy who just jumped from narrative to narrative to narrative, not giving, no, you know. Now I just cared about price, didn't really care about the longevity. Of course, I still care about price. It's the largest driving force. But like my point is, you know, I've settled here, and there's a community here, and that's quite lacking in much of other crypto, and I think there's some real value to that.
absolutely. I mean, I like to use the Applebee's analogy. You know, the hex community is the Applebee's of crypto. You know, it's a nice comfort food restaurant that, you know, that you can take every average American to, and they'll find something they like. You know, it's not effete or snobby like a French restaurant, right? You know, so it is super, super powerful. It's actually way more important than, you know, that's the reason why I don't get bummed out about Pulse Chain basically not having any technical improvements over Ethereum, right? Because I don't actually think that matters. But you talk to an engineer, you know, like one of the guys that created, you know, some of these tokens I was talking about earlier, you know,
Or
these
even like Eric Wall.
yeah, exactly. And they go, well, but you know, why would you do this? You know, it's like,
This makes no fucking sense anymore.
yeah, it makes absolutely no fucking sense to me, right? You know, it's like, well, you do it because you wanna have a better community, not because you necessarily even want a better blockchain, right? And you're gonna make a ton of money doing that as well. So yeah, there's some really good people. Once you push aside the idiots, there's some very smart, wealthy people in this community.
There are some very low-key wealthy people in this community for sure.
There really are, and they're invested mentally and financially in this, right? So it's quite interesting.
It is actually very interesting on multiple fronts. And another front in which this is interesting is I find, I don't know if you guys agree with me, but how easy it is for, I think, some people to miss the point of the inherent value behind such a fervent community. Like, for example, there was a video came out a couple months ago. I don't mean to like breathe light into it, but it's relevant to the point I'm trying to make, where it was calling like Hex a cult. You know, a lot of people like to call Hex a scam. This had a unique take, which was it was a cult, and the whole video was like Hex cult, therefore bad. But my take was Hex cult, therefore good. Like, motherfucker, you want your coin to have a cult. You want your community to be so goddamn cultish and so protective and so bullish on their coin that it resembles a cult. Like, this is a good, like, I just don't understand.
Yeah.
If you have, you know, any kind of investment vehicle where people are fervent, strong believers, they're you know, they spread the message, you know, they believe in it very strongly, people view it and be like, oh, this is terrible. No, motherfucker, it's good. This is price positive. And it's funny how, I don't know if you guys agree, but like it just doesn't click for a lot of people. Do you guys feel the same way?
Absolutely. Absolutely. So people called Apple a cult 20 years ago, 25 years ago, when Apple was basically inferior to Windows in every way, right? But it still had this core following of kind of weird creative types that used it, and just people that didn't want to be conformists, right? That like it had this sort of weird environment. Windows was very corporate. It wasn't fun, wasn't creative. It was stymieing, right? I'm going to go use Macs. But in the 90s, Macs were terrible. Basically, they slowly started to close that gap, technologically speaking. But they weren't even really that much better till later, right? But it always had this cult around it with Steve Jobs behind it. And then they made a couple good products, right? But they didn't even invent those products. Like other people created MP3 players before the iPod. Other people created smartphones. We had the Palm Pilot, 10 years before we had the iPhone, right? We had other tablets, but they did very simple things well and created a whole ecosystem of very fervent people. And they also started from a very small market cap. It was only about $6 billion, if I recall, in the late 90s. Right? It's $1 trillion.
About $6 billion.
It's a $1 trillion company now.
It's a couple X's.
Well, like it's pretty crazy when you think about it. But that was Apple back then, right? And yeah, everybody said, why would you use Macs? They don't have any of the good processors. They don't have the games. They don't have, you couldn't get the applications, right? If somebody invented a new application, you'd have to wait 6 months until someone else created a shitty Mac version of that application, right? It just sucked in every way, shape, and form. And I was one of these early Mac fanboys, right? From this period, and I watched it go from being a complete laughingstock to being, what it is today, in a relatively short time frame. So I think that's the model that we should try and emulate to the best that we can. I'm not saying we're going to succeed at that, but I think we can go from laughingstock to being, taken somewhat seriously by people in the next cycle. And I think if we get that far, we're all going to make a fuck ton of money. We don't have to beat Ethereum. Right. And I'll say we probably never will. Right. But even just getting, 1% of Ethereum, 10% of Ethereum, translates to oodles and oodles and oodles and oodles of money. And I think that's what I'm playing for anyway.
Yeah. Yeah, absolutely.
And one more thing, what is a religion? Religion is a cult that stays around for 1,000 years plus, right?
Yeah, once it sticks around for a couple generations.
The Christians, the Romans were looking at them like, you guys are fucking weirdos, and they had to live in caves, basically in hiding, right? But eventually, Rome became Christian. It's called the Roman Catholic Church for a reason, right? It didn't start out a Catholic empire, right? That took some time, but so yeah, when they say the cult thing, it is an important thing to have, actually, because I don't see it the same way, with DOT. It's apparently a really useful L1, but I don't know anybody who uses it.
I know one dude who believes in it very passionately, but it's a much smaller community, to say the least.
Yeah, and it probably does everything way better than our L1. I'm sure it's got more throughput and all that stuff, but it's just too hard to use, right?
Very hard to communicate. A faster, cheaper version of Ethereum, people get that, but you try to explain parachain auctions and lockup periods, and it's not retail friendly.
Yeah,
you lost me already.
Whereas what is universal? It's what what gains are, right?
Free coins?
What? Yeah.
Number up.
Number up. I understand that. I like that.
Yeah.
Right. So that's how hexagons talk about stuff. Right.
Yeah.
That's way easier, right?
It's a better game to play,
yeah.
That's
way easier to understand than Eric Wall opining on ordinals or ZK syncs and showing how smart he is. Like, no, thank you. That's not. You know, like did Steve Jobs, you know, get up on stage and like go through the transistors and stuff, you know, in the iPod? No. He made it as simple as possible. He put one fucking button on it.
Yeah, literally, yeah.
You know, like, you know, here you go. At the time, we were all using Blackberries and shit like that, right?
That's true. Yeah,
you know, you
with all the fucking the smallish keyboard on it. Yep.
You had like 30 buttons on this fucking BlackBerry. It was like an arms race to see who could put more buttons onto a phone.
True.
And Steve Jobs just goes, yeah, fuck that. How about like no buttons? Oh, okay, maybe a power button because we need one in case, you know, you need to hard reset it. But otherwise, no buttons.
It's actually very analogous where it's like in this community, it's like number up. That's our one button, right? Or like care about number. Where instead it's like you put like polka dots, the BlackBerry, where it's like, oh, the parachain auction is happening after the candlelight ceremony. And stuff like,
yeah,
you know,
it's too complex. Yeah.
Interesting.
That's right. Because when you bring it up to that kind of level, you lose pretty much everybody.
Right? Yeah. It's like the ultra nerds will love it, and like for someone like for me, I'm a crypto nerd. I like just delving into the nuances, but like I'm 0.01% of the population, right? Like that's
and I mean, you know, this stuff now like we take it for granted, but it's like, you know, you guys don't really care how your internet gets to you or, you know, what all the things that are happening behind it. You just want to be able to swipe left or right and go meet the girl, right? You know, that's true. That's pretty much what you're after, right? You know, so it's like ideally, you know, as all these things improve, we'll just steal them, you know, but what we want to keep is the community of fervent believers that are going to ultimately push us forward.
On this point of kind of simplicity, do you guys have any critiques of, you know, the kind of current user interface system, DeFi in general, but specifically in Aave, GMX? Do you think like they're good enough? Is there any improvements? Anything that jumps out to you in terms of UI, UX? Or do you think it's fairly just straightforward? This is good enough. This works. Like no need to reinvent the wheel here, kind of thing. Or how do you guys view that?
It depends on the protocol. My thinking on that is like with Aave, I see that as a kind of a business to business style protocol. I don't actually care about making that usable by moms and dads. You know, I mean, I don't think it's hard. I think the UI is great, but I actually want it to just feel familiar, right? You know how airplane cockpits, you know, they don't. It's not a thing to like customize your airplane cockpit, right? And that's because you want the pilot to know exactly the pilot's rated for exactly this specific airplane,
right?
And you know he's going to come in and know exactly how to use it.
You don't want to confuse pilot.
yeah. And there's guys out there that use Aave in size, and I want them to show up and be like, oh yeah, I know exactly what I'm doing here, and I'm going to do that now. Right. So here's how I do my flash loans. Here's how, you know, here's how I borrow, etc. So that's kind of one aspect of you know, of that. With the GMX fork, I love GMX and its layout and all that stuff. What I think it could do better is the social media side stuff. So creating, you know, contests, you know, rankings. Like letting people kind of feel like they're a part of a community. I don't think they've really done enough there, which makes sense because, you know, they're anonymous coding dudes that don't even want anyone to know who they are, right? You know, so like they're not interested in that side of things. But I think for, you know, building a GMX fork for the Hex community, I want there to be this sort of ability to have bragging rights. Right. And so that people can make it, you know, make a trade and brag about it on, you know, Twitter. Right.
Also, guys, a social media package, you know how PulseChain, PulseX is the downloadable logos, all that stuff. I know it sounds like a small thing, but for us influencers, being able to go to a website and download all the correct logos and not having to scroll through, it's a thing. Like it's not nothing. It's making it just that much easier for people to find HD versions of logos, everything, color schemes. It's not nothing. So
Absolutely.
yeah,
Yeah.
it's something I'm trying to tell every project I speak to is just like this.
We need to do that better. I blame the interns as usual, but because that's something that's definitely not my forte personally, but I definitely understand exactly what you're saying. You know,
low investment, high reward. That's all I'm saying.
Absolutely, yeah, and it's it's definitely a key thing to do that we need to do better. The UI thing is interesting because it's like it's not something that I feel like we have a real competitive advantage on yet. I would like us to be better at it. It's not where our strength is currently. So that's definitely a place where we have room for improvement.
I hear you. Okay. Now, guys, look, I don't want to make this stream too long. I'll try and wrap things up soon, but there is kind of one more question I did want to ask you. So part of the point of me starting this channel, the Brandon B Show, is to track kind of like my own personal finance journey. I'm really trying to go from someone who's not financially free at all. I'm a financial slave. If I don't do something to make an income, I'll be thrown in jail eventually. They'll come after me, the debt creditors, whatever. But I'm trying to go from that to hopefully one day being financial free, retired before 30, all that stuff. And so a lot of what I'm trying to do and hopefully going to do moving forward on this channel is kind of share the wisdom, the lessons learned, where I've found success along the way in an attempt to perhaps help other people, learn wisdom and insight, that kind of stuff. So I want to ask each one of you, could you guys share, where have you and how have you found personal success when it comes to investing or even just personally yourself? Is there any kind of wisdom, insight, alpha you could share as to, how you found either success financially or personally in your own lives? Dylan, do you want to start?
Sure.
This is going to be very short for Dylan.
Yeah, I mean, I was going to go into the business acquisition field and try and do roll-ups and stuff, right? That was in late 2019, early 2020. Okay. And COVID kind of ruined that for me, because like I was, working with some law firms. I was doing well, right? I had a few deals lined up, and then it all fell apart when literally COVID hit. Months after I started doing everything, and everything followed. Nobody wanted to talk to me anymore. Nobody wanted to do anything, with me or anything like that, right? So I stopped and I pivoted because I had this, this other thing where I was, learning about crypto as much as I could throughout all of 2018, in 2019 and 2020, right? And keeping up to date with what was going on in the crypto sphere, right? And then so I pivoted from doing that and startups and stuff into basically Hex, right? And then, followed that, was completely absolved, got involved with the community, and did well, right? And then, now I'm here, helping out Buck and stuff, and which I think is probably going to be another great opportunity and, a golden goose perhaps, right? But I do want to try and go back to venturing into, business and, startups and stuff. But I mean, if crypto stays lucrative, there's really no reason to leave the crypto sphere anyways, right? Especially if, monetary policy keeps coming with the free money and stuff like this, I don't, it all depends, right? It's pretty fluid. But yeah, no, crypto is my my ticket that I guess you could say I got lucky. A lot of things lined up at the time, and I saw some of the opportunities and I took them. So, tried some things, didn't work out, pivoted, and here I am today. So
I think that's actually really important. That ability to pivot, right, and realize where there might be a better opportunity. I mean, that's something I've experienced personally. Like when I got into the space, one of the major things I was doing when I first started was like leverage trading. Like when I got in, guys, like I wanted to be like, I want to be a successful trader. That was my identity. Like I want to be successful. leverage trader. And let me tell you,
Good
when
luck
you're
with that one.
yeah, when you're leverage trading very often, you're exposing yourself to risk, and that risk manifests itself. And so, like, I wasted so much goddamn time leverage trading and so much goddamn money. That, don't get me wrong, I made some good trades, but I made some bad trades as well. And so if I would have just spent that same amount of time and effort and put that same capital and just put it into X instead of wasting a year, I would have been so much better off. So that's actually a very good point. That willingness to pivot and acknowledge, like, wait, when there's a better opportunity, I think that's really important for people to realize. Buck, you got anything to add there from your perspective?
I could go on for years on this, but I'll try and hit the highlights. I think you want to know yourself is one thing. Everybody's got their strengths and weaknesses. If you're a really good-looking person, that's a talent, right? If you're good at talking about things, that's a talent. If you're good at coding, that's a talent. So you kind of want to add up your talents and try to find a useful way to make yourself marketable, right? Then you want to also learn how to identify talents in other people, right? Everybody's got something they're okay at, right? If you can leverage other people's talents, you can really succeed. A key thing to take into consideration is if you actually want to get rich, you need to own something, right? It's really hard to just work for somebody and get rich. I've got one of the best paying, day jobs you can have in finance, right? And doesn't pay, enough to, make me, drive a Ferrari or anything like that, right? You don't get fucking rich unless you own the business, right? That's who gets rich. And I deal with rich people every day, all day, right? And I deal with their intermediaries, and they all got rich because at some point they either inherited a company or they created a company, right? So the problem is, it's like, if you go out and start a company right now, when you're 20 years old, you're probably going to fail because you don't know anything useful. You don't have any skills yet. So I think that's where you want to get. But first you need to go learn how to do something that you're good at, and then learn how to leverage people, and then get that company. So, in a sense, I'm trying to do that right now with what we're doing. I've spent 20 years learning about finance. I'm reasonably good at thinking strategically and thinking about, what's happening and what's likely to happen. And I'm reasonably okay at expressing things, my thoughts to people about that, right? So I have some good ideas now and then. I'm absolutely hopeless at executing them, right? It's just something I know about myself, right? So I go find the people that know how to execute things, right? And I put them to the task, right? But those people probably don't like doing the things I like doing, and they probably won't have the idea that I have. In fact, they definitely won't have these ideas, right? Because they would never be interested in this community in a million years, right? Then I go around and I look at who can be useful to me, right? I don't want to be a public persona, so I get Dylan, who's already a public persona in the community, right? So that's a skill, right? Dylan's got great relationships because he's a nice guy, and he has that, throughout the community. So I let him basically do all my dirty work with the community in that regard, right? So that's a really good asset to me, right? So you can apply this to this sort of stuff to your your own goals, right? Figure out what you're good at. Be honest with yourself about what you're good at. It's not bragging. It's like it's like you want to know, right? And what you're not good at, you can improve on a little bit sometimes, but sometimes there's no point. Like for me, coding would be a good example. I could definitely improve my coding skills.
Imagine about coding anything.
Yeah, I mean, I used to actually build websites when I was in high school, but with HTML, right?
Oh,
but like, like, so I'm not, it's not something that I'd never had any passion for, but I just realized through years of experience that I'm not very good at it. And there's people out there that are just way more patient than I am. Right. I'm a very impatient person. And I like to think about the abstract. Right. So I'm exactly the wrong kind of person to sit there and
go line by line
and fuck around with code.
Yeah.
Right. But I am a pretty good person to dream about things and kind of think about what's coming. Right. So figure out what that is, what your profile is there. Like, I don't know, Brandon as well. But I know Dylan okay by now. So like Dylan's like very personable, very likable. He puts everybody at ease, right? These are his strengths, right? So that's the perfect type of person for a kind of client relationship type person, right? He's not a fat repugnant guy. He looks like Jesus, right? So it's like, that works. Right. And we don't even need him to be perfect or the best at coding. We just need him to do that. Right.
Yeah, of course. Yeah.
So, and that's a very important skill. Right.
Yeah.
So it's a very important skill. It means I can be an asshole and I've got this guy there that makes me
right. It's the yin to the yang, right? Like you're the one seal, he's the other seal.
Yeah. Just annoying each other. Yeah. Exactly.
The ass play, I guess.
Yeah, exactly. So, and that's why, I delegate, a lot of this stuff to him. It's because it's like, I'm not patient enough to deal with these idiots.
Yeah.
Whereas Dylan just can't get angry. It's almost impossible to make Dylan angry. Like, honestly.
True.
Yeah, that's true.
Whereas I can get angry and faster than a Tesla can do
0 to 60.
0 to 60. Like I can get angry very quickly and impatient very quickly. So so I think if you can learn how to really leverage those people, start something or get in the middle of something. You don't have to even start it either, right? But go find those people that do have. If you don't have the ability to dream and come up with the idea, go find the guy that can, right? And then your thing can be, contributing to it with some know-how or experience or just being well connected in a community like Dylan is, right? But you want to start something, and it's the same reason girls like guys that are in rock bands, right? They inherently, we understand there's value to being able to leverage a group of people, right? And being somebody that would be part of something, right? So girls like guys that are in rock bands, because it's like, oh yeah, see, they're showing initiative. They get along with each other. They create something. They provide, right? I want to sleep with that guy, right?
Yes, I feel
that's the kind of psychology there. So
right.
And starting a business is kind of similar to starting a rock band in a sense. You need your weird kind of front man who's got his personality. You need somebody to be the rhythm section and just be steady. You need someone who's just a complete debauched party animal to basically live the lifestyle and all that stuff. And then you need somebody that can just write really good songs. Right. Because probably not everybody can do all of it. You know what I mean?
And being able to acknowledge that as well, because a lot of people struggle like with like for example, me in the case of coding, I'm not a coder. I just like sitting down and doing something that's like so repetitive and so I want to throw like a chair through the window. It's just not me. I have ADHD. I cannot do that.
Yeah, you're like,
but I wasted so much time and effort trying to do that. So, but like that's very important to oneself, being able to admit to oneself, what am I good at? What am I bad at? And double down on what you're good at and outsource whatever you're bad at, right? It's a far more efficient way than just building a business, but just going about living your life and optimizing, your skills, what you're good at.
Yeah. Now there is some limitation to that. I don't want to say don't know anything about coding. necessarily.
Yeah, I don't mean to shit on coding so much.
Yeah. Well,
but like,
yeah, exactly.
yeah.
I guess what I'm saying is, it's good to be able to know a little bit about things, just enough to be deadly, right?
Yeah.
If you're not going to be a master of it, I think it's probably good to go take a coding course, especially when you guys are young, like you guys are. Like, go learn a little bit about coding. Like, I know a little bit about coding. You know what I mean? I can read HTML. So like it's not like I'm completely useless. I understand how at a high level how it works, right?
Sure.
And that's oftentimes all you need, especially for management, right? So
just enough to know what you're talking about, kind of thing.
Yeah, the people that are really specialist, and you guys probably aren't the corporate types, but in case you ever try that, the people that are really specialist and really good at what they do, they never get promoted, right? Because they're too fucking useful at that thing. And it's usually chuckleheads like me that get promoted because I'm not particularly good at anything, but like I'm decent at kind of seeing what needs to happen, what's important, and going and yelling at everybody until they do it.
Yeah.
Right.
Yeah.
And that's what management does.
Yeah.
It is good to know a little bit about it. Like I should know more about the inner workings of crypto, like Eric Wall. I don't want to know as much as him, but like I should get better at that. That's on my to-do list, right? And that's not because I actually care about that stuff, but it's just it'll make me a little bit more credible when I talk about crypto, right? Like I've got a pretty good knowledge of finance. That comes from years of studying it, right? And I didn't enjoy every aspect of that, right? Especially accounting.
To clarify for the folks, sorry, did you have like an investment fund background or?
Yeah. I've been in the fund world for 20 years. So,
really?
Yeah. So you see the CFA after my name. If you Google CFA, it's basically like a PhD in finance, right? It's very hard to get qualification where you have to sit for 3 competitive examinations in a row and pass them, and the pass rates are very low, right? Like 20%, right? It's basically a massive volume of work, and you can only take these tests once per year, right? So if you fail them, you have to try again next year.
The
right?
boss gets mad.
Yeah. So basically, everybody in traditional funds management world has this charter if they're under the age of like 50, right? It's like a prerequisite basically for the industry. But like I had to do all that stuff, and a lot of it I'm not good at. Accounting is a good example of it. But the funny thing is there is a prototypical type for every industry, and you can go be that person, right? And do well. But sometimes it's also good to be the kind of person that is different from everybody as well. It's a hard path to walk, but it does give you a value add, a big one, right? So if everybody in your industry is like really techie, right, but you bring soft skills, emotional IQ, or strategy and things like that, you may find yourself actually standing out in kind of interesting ways. So it's good to mix things. So like the simplest way I would explain this is if I were telling you to select a major, I would say pick something really scientific and pick something, more liberal arts and do a double major. Make sure that you understand science and math, but that you also know how to do, history and politics, right? Because having all those skills makes you very effective. I think Steve Jobs, when he was at Bard, where he dropped out, he took classes in calligraphy, right? Which, it's like the calligraphy is like literally the most retarded class you can take at a fancy liberal arts college, right? It's like the joke class, right?
Right.
But that came in handy later because, one of the big things that he understood about computers was like, oh, well, they're ugly, and so he put fonts into the early Apple computers, and made them pretty, right? But fonts didn't really exist until then,
Right. 'Cause if it's just a bunch of engineers, just like make it work, just put the fun, you know what I
Yeah,
mean?
yeah,
But
they don't
yeah,
care. You know, they
yeah,
really don't care.
Yeah,
Like if
the
you go
green
look at Curve's website, you see what I mean.
yeah,
Right? If you
screen.
look at Bloomberg terminals, you see what I mean. I mean, to these guys, all that stuff is just fluff,
yeah.
Yeah.
right? And it's annoying to them.
And then you look at Robinhood, and it looks real pretty.
Does
Yeah.
it? Yeah, makes sense. Yeah,
Yeah. And again, all of this too, it's like, you know, you're talking about how to essentially bring out the best out of yourself, and it's important to do so and increase your skill set because that increases your earning capacity. And the more you can increase your earning capacity, the more you can do, which is what you mentioned in the first place, which was accumulate assets. It's all about owning something, right? It's either a business or assets. And you know, I remember there's a statistic I like to bring up. I might slightly misquote it, but it's like 1% of the wealthiest in the United States owns, if it's 48 or 50%
Yeah.
of all the assets, right? 1% of the population owns 50% of all the assets. So it kind of gives you a hint as to what you ought to aim for.
yeah,
But it's funny, and this is something kind of like I ran into myself. It's just great, you can realize that, but if you have no capacity to earn, then you can't really, you know, exploit that understanding. And so you have to find some way to leverage yourself, right?
that's right. But you know, the thing that there's, I think a lot of people are probably lied to and think the way to get to that 1% is to, you know, necessarily study real hard and go get a job, right? Because most of the people that are in that 1% were people that actually got in the right place at the right time, or inherited it, right? So, you know, how do you get yourself in the right place in the right time? You get together with some smart people and you create something.
There you go.
You know, yeah, that's the way to get rich, because wages suck, basically. Even at the top end of wages, they're still not enough to make you super wealthy, right? Sure, there's a couple CEOs in Silicon Valley that make $30 million a year, but you're never going to be that guy.
No, but
No
even
one listening to
CEOs,
this
it's
is
like
ever
a
going to
couple
be that guy.
100,000, a couple million. That's not, you know, that's
Yeah, the majority of the people that work for that guy are making like 150 grand, which is a good income, right? Sounds like a lot of money to young guys, but it's like, you know, you have to pay taxes on that, and you got to go buy a house, and you know, your houses cost $1.5 million in any halfway decent area, you know, and then you're like, okay, it's not that much money anymore,
No.
you know.
Mm.
You know, so, but then the guys that actually own businesses, they basically make absurd amounts of money, and they get to expense a whole bunch of stuff. And average people just don't understand this. They just don't know it. And if they did, they'd be fucking pissed, right? You know,
Yeah.
you know, like
the amount of money out there is insane.
so, some people are making absolute bundles of money, and you have no fucking idea.
Yeah.
And they're making them oftentimes in the dumbest ways, right? You know what I mean?
Yeah.
Just like flipping houses, or you know, having a car dealership, you know, just stuff that like a monkey could do, right? You know, but the point is they own their little niche, right? They've got their little thing that they do, and they don't collect a salary for it. They get everything, right? So yeah, if you guys want to get rich, the way to do that is to start something.
Right.
Yeah.
Own a piece of it.
Own a piece of it. Yeah, exactly. I mean, like I work, you know, in an industry where it's like the guys that I work for that own, you know, the businesses, they're making, you know, 30 times what I'm making. You know what I mean? And I'm paid pretty well, right? But you know, why are they 30 times better than I am? No, right? You know. But why do they get 30 times more? Because they were there 5 years earlier than I was. You know.
Yeah.
Like, yeah. That's the way equity works. You know. Isn't that nice? You know what I mean? So get yourself into that position, guys. Doesn't have to happen in your early 20s. You know, go learn some stuff. You know, but yeah. You know, when you get to your 30s, that's when you need to definitely make that move, because I think, you know, when you're pushing 40 and you haven't,
You're starting to get more desperate.
you're gonna hate yourself, right? If you don't,
You can only, join the army as a plan B for so long.
Yeah, exactly. But I mean,
Yeah.
you can get to the top of your field in a sense, and still be making a couple $100,000. You can be making $500,000 and you're still not rich. You know what I mean?
Yeah.
You're rich when you're
Isn't that
making
crazy?
millions of dollars per year.
Yeah.
Right. That's the bar now. So even making $500,000 doesn't make you rich. And I know a lot of people listening to this will be like, I literally murder, kill, do whatever to make that much money, but it's actually not that much money.
Yeah.
Right.
Yeah.
And I know this because I see what wealthy people actually have. Right. Like I literally like see sports players, ones you guys all know. They invest in my funds, and and it's not them investing in them, it's their intermediary. But it's like I see it and go, holy shit, who would have thought that guy could just throw $1 million? Because if he's giving me $1 million, it means he's got 100 million, right? I'm getting 1% of whatever he's got, right?
Should be making at least 20.
Yeah, it's just pretty fucking crazy. But then I'll get the same amount of money from some guy, and if you Google him, you won't even really find anything other than like a fucking, like a car dealership, in Skokie, Illinois. It's like so that guy's actually got the same amount of money as the celebrity athlete that you think of as being really wealthy, right? And all he's got is a real estate business, or a financial planning firm, or just boring shit, right? That makes them super wealthy, right? So it's like, so a lot of the things that are obvious aren't actually great ways to make money, right?
It's the boring ways, right?
Yeah.
It's owning a trash company, like
there you go,
or whatever, right? It's the things people don't really. It's the non-sexy things, right?
Yeah,
it's like, oh yeah, that guy.
Everybody wants to go do, and I think leverage trading is a good example. It's like, it sounds really good. You it's like you're a gladiator and you go in and you make money, right?
No, it's the guy selling the course, teaching you leverage trading.
That guy, or actually the guy running the exchange. He's making.
It's the house, right?
He's always making money.
Yeah,
which is a concept that's very near and dear to me. I quite like this. Personally,
being the house,
so I would encourage you to be the house, guys, always, in whatever it is, right? I love going to casinos and playing poker, and the thing I love the most about it is all these assholes that are there trying to do it for a living, and they all think they're so cool and whatnot because they're making like $80,000 a year playing poker in a casino, and like maybe the really successful ones are making like 150, right? Playing really tight, and it's just like, you fucking poor miserable bastards. I'm here entertaining myself. I like playing poker, and if I lose, like, I don't care. And if I win, I know it's going to ruin your fucking day, which is hilarious to me. But these guys all think they're so cool, and then I just look around and I go, who's making money here?
It's such a exactly.
That's who's making money. It's pretty funny. I love that.
It's a crazy mentality because, like, to do poker well, you got to be so strict. And the second you get bored, you're like, I'm not feeling it, like, quite this hand, and it's, you bet when you shouldn't, and all of a sudden, how much work is gone. So it's
Poker is a complete waste of time, except for it teaches you certain skills that you can then go apply to everything else you do. But like, actually trying to get really good at poker is one of the dumbest things I've ever heard.
It's a bad risk to reward ratio.
And every asshole, in a fucking hooded sweatshirt in America wants to do it, right? But it's a zero-sum game, right? You might just be lucky, and you might lose everything, on a good day, and over time, it's a zero sum. So you're basically hoping to collect a little bit from the people that play really suboptimally, right? So you're literally waiting for those people to show up, and it's just like really stupid.
It's a bad business model.
It's a really bad business model. But you can learn things from poker, like discipline and strategy, and how to read people.
Yeah, there's better ways to do it, though.
But yeah, probably.
Yeah.
But like I think playing poker is probably a good thing to do for like a month or two, so that you learn those skills, and then never play poker again unless it's for fun.
Right.
It would be my advice. Right.
Yeah.
But yeah, I see all these idiots going down the rabbit hole. Like, I want to go to the World Series. I want to be a professional poker player. No, dumb. But apply those skills to, the real world. They'll make you a better business person.
In speaking about like business, and I'm actually extremely curious about the GPLP world. And for those who don't know, it's like a general partner. It's like who owns a fund, a limited partner, people who participate in funds, invest in funds. Buck, I'm very curious in regards to the world of LPs. What would you say is? I'm not sure, like what, if you even have an opinion on this, but if you do, is the greatest hesitation or greatest resistance point when it comes specifically to investing in cryptocurrency? Do you have any intuitions on that?
Yeah, I think there's a lot of crap in crypto is part of it, right? So a lot of crypto is just absolutely fucking trash and useless, right? And trash is actually oftentimes what pumps the hardest. And these people actually need rational reasons to invest in things, right? It just pumping the hardest is not a means to an end, right? For a proper investor, right? You potentially what is this thing Dylan's got?
My camera just died.
Oh, your camera died. So like I couldn't give the thesis for Hex to normal investors and go pumps the hardest, did 10,000x and expect them to be like, yeah, well, why should I should invest now? Right? Like, that doesn't make any sense to them, right? It's just not how you invest. The way you invest is you go, okay, we want, here's a market, fast food, we want to invest in this fast food company. It's growing year on year this much. It's got these plans for expansion. It's currently, in the southwest of the U.S., but we're going to bring it. It's got new management. They've got a really good track record of prior experience. They worked at Five Guys as executives, or they worked at Chipotle as executives, and they're basically going to use that same blueprint to bring this new fast food thing nationwide. Right. Here's the upside potential if they succeed in doing that. Here's what's modeled. Like that's how you invest in the real world. Right. You don't go, hey guys, I got a fucking coin with a dog on it, and it's going to pump hard, and it's going to be on Binance soon, I heard. Right. Because like literally that's actually illegal to say all that shit. Right. Like in the real world, like you can't do stuff like that. Whereas in crypto, it's just really dumb. Right.
Well,
so
yeah.
So that's one hesitation. The other thing is, it's like, if you manage money for a living, you don't want to be anywhere close to anything that's considered criminal. Right. And because it taints your entire operation. Right. So that's another reason that a lot of these businesses are scared shitless of crypto, right? Like,
are you saying like because of FTX, that kind of thing?
No, not even that. Like, if you're JP Morgan and you accidentally do a transaction with Kim Jong-un,
You're fucked.
You're fucked.
So it's like you're saying that ultimately boils down to like compliance, right? It's like there's so much compliance.
You just can't be interacting with bad people, right?
Right. So you can't use Uniswap, right? The problem is if you're trying to use Uniswap, well, you don't know who you're trading with.
Correct. So, like, for example, I'm launching these protocols. I've taken legal advice on stuff. One of the things I have to do right now is I have to go through the SAC set and make sure that nobody from North Korea, or some evil hacker has sacrificed, right? And if they did, I need to basically freeze that and not give them anything, right? And
how do you even practically do that? Do you have to go to like a third? Like, do you have to go to like? You
do. So you gotta go to a third party list that basically here's here's banned wallets, right? Now, I don't think I'll find anything, right? Because those guys are smart and they, move their money around, right? But the point is that there's still this potential always with crypto the guy on the other end of the transaction that you're dealing with is somebody that you're not supposed to, right? If you go do business with Iran as an American, like you've broken the law, right? So we don't really have frameworks, legally speaking, yet that work for these companies, right? And crypto's still becoming, going from being this community of like weirdos that basically hate the government and basically say, fuck you, we're building something that you guys can't tamper with. Right. That was the mindset 10 years ago when they created this stuff. But to go mainstream now, we're going to make another version of it where it's like we carve out all the real bad things, right? And we make it palatable to JP Morgan or whatever, right? So I think that's coming, right? The other thing is this stuff is still really hard to use. And rich people, they're busy. They don't want to fucking have to learn all this stuff. They don't want to have to learn about t-shirts.
In terms of participating in a GP as an LP,
yeah. So if you're an LP, you just have a relationship with the GP.
Yeah.
You're just a rich guy. You just go, here's my money. Yeah. I've worked with you before. I like you. You've got a good track record. Here's $1 million. I'll talk to you in 7 years. Right. That's it. Yeah. Right. And the GP is some investment banker who worked at Goldman Sachs, tearing apart companies, putting them back together for probably 10 years before he went from investment banking to private equity. He then became an investment person that does this for a living. So actually tries to make money for himself doing that. Right. And that's how he became the GP. Right. That's what a private equity firm is doing, or VC firms are a little bit nicer, but kind of similar concepts, right? But these LP guys, they're busy. They probably own businesses that they're invested in, and that they know really well, and that's their full-time job, right? So they might, they might be running a different investment vehicle, right? But to diversify their risk, they give $1 million to another investment manager in a different space. That's very common, by the way, right? So the easiest people to sell a new investment idea to are other professional investors, because they know enough that they can see a good opportunity when there is one, and they're also comfortable. If they trust you and you've got a good reputation, they'll give you their money, and they have lots of money and they need to diversify it, right?
Right.
But when you try to talk to these guys about crypto, they're just like, "Why? I'm already rich." You know what I mean? And the thing that I don't want is to lose all my money, right? Which crypto, I hear, can do that. And the other thing I don't want is to get in trouble, right? So like these guys are very reluctant to even look at it.
Yes. But there are some investment funds in the crypto space, although from what I've seen is that they tend to be more on the Bitcoin, working with exchanges kind of thing. With your experience, do you see any kind of potential market, any kind of niche LP area or niche, where LPs could be comfortable participating within something that looks like the Pulse Chain ecosystem? Or do you think regulation needs to come in before any kind of like realistic, investing from the LP space in the Pulse Chain? Did you get what I'm trying to say?
Yeah, look, I know some very big people actually in this space. I won't say who, but like some guys that you all know. I actually know them professionally and have for many years, right? Basically right now, we're on the cutting edge of DeFi, really, if just using MetaMask, right? The big end of town is literally still looking to invest either in companies, that do this, like Coinbase, which is very comfortable for them, right? It's a proper company. It's just like any other venture capital investment. they go, okay, you're a business. We understand what a business is. Let's see your books. You've got bank accounts and audits and things like that. So that's the way they tend to invest, to be honest.
Do you think there's a space for? I'm sorry to interrupt you, but do you think there's a space for family offices to be perhaps more willing to take a look? Yeah.
Family offices. The funny thing about them is they'll always have they'll usually have like 30 members in the family, right? And one of them will be a degen, right? So yeah, you potentially you find the redheaded nephew that will invest in any dumb thing, right? That's a potential outlet. But in general, family offices, like the proper ones, they don't want to invest in stuff like that. They're trying to build like a portfolio of useful stuff. They've got their, they want cash flows. They want growth. They don't want hacks. They don't want pulse chain, right? They want
maybe
something
they
they
don't
can put $100 million into. You can't put $100 million into hacks.
Yeah, well, hopefully, if KG from Internet Money gets to work on that OTC market, maybe
is he working on it? Yeah, great. Yeah. We're not even close to there yet. Like in a million years, like seriously, we're so far away. But what I was trying to get to is, like they're still investing in companies. They're just starting to dabble with direct crypto exposure, and it's really just those top coins. Because they have so much money that they can't even buy anything else. Like it just doesn't work. You know what I mean? If you invest, $10 million at a time, you can't buy pretty much any of the coins in our ecosystem currently.
Do you think you could convince them to lengthen their time horizon? Hey, man, this is not we're not.
No, that's not the problem. They have a great thing with time horizon. That's something they do way better than we do.
Yeah.
Right. But they also look at this and they go, how do I get in? How do I get out? Who's behind it?
Do you think you could pitch that as the solution, extending your time horizon as being the solution to kind of the short-term illiquidity where, hey, if we're trying to exit out a large position over this next month, it's a problem. But if we're trying to exit out this large position over the next 5 to 10 years, then less. Do you think that would be something they would buy or no?
No, I don't. Like, I think, honestly, anybody who's at all sophisticated will look at this and go, I'm running a million miles away from this. Right. This sounds like something that'll get me in trouble. I'll get fired if I suggest this investment. Right. Because a lot of times these guys have intermediaries working for them. Right. So if you go there trying to talk about this time deposit on the blockchain that pays you interest when it's actually inflation, but whatever, like they'll just run away from you as fast as you can and not return your phone calls. Honestly, there's just no way to explain this to these guys in a way that it's going to be appealing to them, unless they happen to be that kind of degen, right?
Right.
But corporations tend to not be degens.
Right.
Investment companies tend to not be degens as a whole, right? It sort of balances out all those weird personality traits, right? And what you get is sort of a homogenized, rational entity that thinks collectively, right? That entity is never going to go, hey, we're going to go big on the Richard Hart universe, And if you look at like the one quote unquote VC guy that we have in the community, Rackham, I'd say he's a pretty eclectic individual. He made his money on, am I right, Dylan? Is it medical marijuana? Right.
He had an ICO early on in 2017, I think.
Yeah.
Don't know how that went. And then I think he might have had some marijuana stuff, but I can't confirm that.
Yeah. Okay. Well, in that case, it's like, I don't think he's a typical private equity VC guy. I think he's, he's a Florida one. And he's pretty, I think he would admit that he's probably a lot different than, the kind of white shoe PE firms and VC firms that you see in New York and California, right? Horowitz or whatever. I think in general, like that's going to be a very hard sell. And oh yeah, we have an SEC investigation. Like, fuck me. Yeah, I don't want to go anywhere near that. Thank you very much. Like, kiss of death for those people.
Do you think until this SEC investigation is over, it's frankly unrealistic to think that LPs, GPs would even touch the Richard ecosystem?
Yeah, pretty much. I mean, like, corporations wouldn't go near us. I mean, there's a reason. There's a reason why we're not on CEX as so much as well, right? It's a two-way street. We don't want to be on them, and they don't want us either, right? Like, we're controversial, right? But when it comes to investments, I try to practice brutal honesty.
Yeah.
Right. You know what I mean? Because I think it's not a place where you should worry about people's feelings when you're talking about investment. Right. You need to say it as straight as you think you can. No, we're not that kind of community yet where, we're gonna be bantied around Silicon Valley as geniuses. But that's okay. We don't need all those people right now. What we need to do is we need to go get all the people that don't care about that shit invested, right? Yeah. And then if we get big enough, then we can be then we'll bring them in, the big boys in later. But yeah, we're not going to have that CV. Like, a good example of what that would look like is what Jack Levin's trying to do, right? So Jack has a great CV. He looks credible. He has contacts in the Valley. He's run businesses before. He's gonna do a fully doxed kind of VC round with wealthy crypto people. But you're gonna it's gonna be totally by the book, totally legal. All the law stuff is gonna have. And so he can then go pitch that to those types of people that you're talking about.
Right.
And they'll go, great. I'm probably not going to get in trouble for investing in this one. We're the complete opposite of that.
Yeah. If to perhaps echo some of what you're saying, it's not just about the upside, it's about the risk mitigation, it's about the compliance, it's about the, making sure you're, not getting in trouble, basically.
Yeah, it's for a corporation. It's a very important thing because you can sink the entire ship. Look at what's happening to Circle right now, right? Their brand is being really tarnished just because one of their banking relationships blew up.
Yeah,
right. It's not even like they did anything wrong, really, right? It's just one of the banks they use, and I'm sure they use many, blew up. That could be any of us, right? They didn't even really fuck up here, other than they probably should have withdrew that money a while ago. But I'm not sure why they didn't. But it's not like they themselves screwed up, as a business so much, right? It's just literally the bank they use screwed up.
Right. Yeah, that's funny, man. It's funny how this whole investing world works.
So you can be taken down just by an association to something that's bad or blows up.
Yeah,
right?
Yeah. All these
So
considerations.
in general, investment stuff is super clinical and super squeaky clean because they don't want. If you're a reputable firm, you don't want to be anywhere near things like that. So if your investment doesn't fit that description, you need to go to a different part of the market, which is a weird market of medical marijuana investors and eclectic people. But it's not Susquehanna or Sequoia or PIMCO.
I hear what you're saying. Yeah, I think I've come up with a little bit of an interesting question here. Let's say I put this is just a funny question. Forgive the analogy, but let's say I put a gun to your head and I said, you as a GP need to go and try and raise either yourself or hire $5 million from and pitch the kind of Richard Art ecosystem. You have a year to do it. Do you think you could do it? You need to raise $5 million. You have a year. Pitching the Richard Art ecosystem as a GP, you have to raise $5 million
to like proper investors.
Yes, anyone you can get, family offices, anyone. You just got to raise.
Oh yeah, no, that I could do so long as I can just go to normal people. But
well, I suppose accredited investors, right? Like you got to meet like there's certain
yeah, that's what I mean. Normal people,
Yeah.
right? They're wealthy people, but they're normal people, right?
Yeah.
Yeah, you can, so long as the thing about it is, if you know how to speak convincingly about investment, you can always call up a grandma, and as long as you're polite to her and nice to her, and you tell her a good story, she'll probably give you some money.
But the grandma's also got to meet a certain threshold too, as well, right? We're talking.
If she doesn't, you're legally not allowed to talk to her.
Exactly. Yeah. But you're talking about grandmas that meet the threshold of
rich grandmas.
Yeah.
Correct. Yeah. But that's the truth. So like, if you do want to ever go raise money, like you're talking about, we were talking about, starting your own business before. So, forget Richard Hart for a second. Let's just imagine we're creating Brandon and Dylan Co. And you needed capital to get that business going. You go to your family and friends and your contacts, and you basically go, "Hey guys, here's what we're trying to do. Here's what we think can happen. Here's the upside. Are you interested?" And most people don't really know how to judge these things, and most people have money sitting around that they want to invest somewhere, and they think that they're the right person to do it. So you find those people pretty easily out there, right? So yeah, you could absolutely raise money like that. But if you want me to go raise money from the California teachers pension for the Richard Hart ecosystem, I'll tell you right now, I couldn't get a cent.
What about Dubai? What's your intuition about the international market? Do you think there's less?
Like Dubai has a whole bunch of really weird, dodgy investors in it. So yeah, that's definitely a good hunting ground for kind of weird, dodgy investors.
But not necessarily a hunting ground.
But once again, like not the sovereign wealth fund of the UAE. Like they're if you go there, you're talking to someone like me, and he's going to be sitting there going, "Oh, I don't want to lose my job," right? So like the Qatari sovereign wealth fund is not going to invest in the Richard Hart ecosystem. No, there's the Kuwait fund or the Norwegians. Temasek's not going to touch this, right? It's going to be some sort of weird, billionaire marijuana medical marijuana investor. That's the kind of profile that you'll get.
And if we had to summarize what's the problem? Would you say it's regulation? Would you say it's a liquidity problem? What would you say is like the issue? Just the risk?
Yeah, it's all of those risks that you just mentioned, and just what in general, it's the basic due diligence that a proper investor undertakes on any investment, and all of the red flags that would be raised, and just a general loathing of such people to take any kind of risk about something that's going to make them lose their job, right? And doesn't look what you call investment grade, right? Investment grade is, hey, I was an engineer at Google, I made millions of dollars. I started another company. It was successful. Maybe I started off with, a really good college degree as well. I forgot to mention that, I've got a 20-year track record of making people money. Here's people that I've made money for in the past. I've gone to them first, and they've already given me a few $1 million. I'm coming to you because I want some more money, some more partners, right? Like, that's Jack Levin pitching X1, right? All right, now let me do Richard, right? Hi there, I'm the best person in the world. My thing went up 10,000x. I didn't go to college, as far as you're aware. If I did, I didn't finish it. Nobody really knows much about me, including where I live, right? I went to a black elementary school, but no one knows anything about my friends either, right? I've created a cryptocurrency that is despised by most of crypto. I used to be a Bitcoin maxi, and then did this, and basically everybody hates my guts now in crypto, and I hate them back. Right? I don't get along with anybody. I don't get along with CZ. I don't get along with Brian Armstrong. I'm not friends with anybody. You know what I mean?
Yeah, I'd pay to be sit in that room watching that pitch.
But you should invest your money in me. Oh, and by the way, I have there's 95% of the tokens in this thing are controlled by a mysterious entity that we don't fully understand or know who it is or what they're doing or what their motives are, right?
Yeah.
Oh, and there's an ongoing SEC investigation against me, right?
Yeah.
It's just like you're just pushing too much shit uphill. That's a good metaphor. You're pushing shit uphill. If you just imagine a big pile of shit and try to push it uphill, it doesn't work very well because you push it and it just kind of falls on top of you. Yeah, that's what you're doing trying to pitch hex to corporations, right?
Do you think Pulse is any easier of a pitch?
Slightly.
Slightly.
But yeah, it's still hard, right? The good thing is most people don't know to ask these questions, right? So when you put something like hex in front of an investment professional, like it just gets rejected, right? But if you put them in front of a soccer mom with who divorced a guy that owned a car dealership and now is worth a few $1 million, she doesn't know to ask this stuff. She doesn't care. She just likes a nice story. So you can definitely get that type of person to invest, right? But yeah, not a corporate. Like I still have a hard time getting my partners to take aspects of this community seriously, right? You know what I mean?
Yeah.
And it's like no, like we really have to, right? These are these people are counting on us, to deliver these things for them. So like that means we need to take Pulse Doge seriously, right? You know what I mean?
Yeah, no, that's a great way of putting it, man. Did it ever cross your mind to attempt to go about things in the traditional raising capital in the traditional way?
For this?
Yeah.
No.
Why so?
It would be impossible.
Regulation.
Just be like no one serious would want to do this, right? You need to drink the Kool-Aid. You need to understand it and trust it, right? The reason we're doing all this is because the community wanted these solutions and is willing to back us, to the tunes of millions of dollars to do it, right? That gives us the incentive to go do it. Which is actually very powerful for the community that they're willing to take those kind of risks on us and people like us. But it shows you how dedicated they are as well, right, to try, like, because they could go make money a million ways.
Yeah.
Why this one, right? But it shows you how dedicated they are to trying to build things and see success on this chain, that they're willing to take that extraordinary risk on things like us.
Yeah. I by the way, I super appreciate your time here, man, and your willingness to delve into this and explain all this. This is super interesting stuff. Dan, we've been going on. I wanted to keep this for till 1 hour. We're running up on almost 3 hours here. So, guys, look, I could keep asking questions forever here for the sake of respecting your time. I think it's maybe we should start to wrap things up here. Guys, super appreciate everything. Is there anything on your guys' mind that you perhaps wanted to touch on that we haven't yet?
We covered
We covered a few things. Buck, what'd you say?
Yeah, no, I was gonna say I think we're good from my perspective. What about you, Dylan?
Yeah, I think if we haven't already, where to find us.
Yeah, plug your stuff. I'll leave it down in the description below, but just
t.me/Hexastani.
Buck changed his name, so I can no longer meme him and tell him to go to his DM. But
yeah,
and if you guys have any questions, you know where to find me on Telegram, and follow us on Twitter, etc., etc. Yeah, I think that's pretty much it for us.
Okay, right on. If you guys don't mind sticking behind the scenes just for a couple seconds after this, I greatly appreciate it. For the folks watching, I'll leave links down in the description below so you can find all this stuff after this. Everyone, super appreciate it if you like and subscribe. Share this video. That way other people can get caught up on what's going on. It's been a very interesting conversation. Again, to you guys, I super appreciate you guys coming on, sharing your opinions. I personally found this to be a very interesting live stream. Again, I planned this to be an hour. I found it so interesting. We're almost here for 3 hours. So everyone, thank you so much. We'll wrap it up. Until next time, take care.